Right, so there might be a gap. Yeah. Yeah.
Good morning, please be seated. Were you gonna sit in that chair?
No, go. I don't the chairs.
Is this, are you hogging the chair?
Mike's hogging chairs. Okay. Who's on first? Here we go. All right.
Good morning. We don't have any outstanding read-ins, but I will check for other administrative matters.
Good morning, Chair Gillette. We have, the company has just one administrative matter. This relates to LFEs 13 and 38 that were requested by Mr. Paff. And what we're asking is they are linked to LFE 1, which has a due date of May 17th, and we're asking if the due date for those two LFEs could be changed to May 17th. What we have as his request was, could I ask for a late file that provides a description of the validation procedures performed on the company's plant model, and also request any supporting documentation and or proof of the validation procedures. And for purposes of this response, you can limit the validation procedures and the supporting documentation to the plant model that you're going to provide in the update. So I think he linked it to the update, and so that we think it makes most sense to come in at the same time as the update.
I see that and I can accommodate that. However, I think the limitations of Lotus will not allow me to change the due date in it. So I'll say for the record that 13 and 38 have an extension until May 17th.
Great, thank you. That's all we have today.
Okay. Attorney Wheel.
Thank you and good morning, commissioners. I just had one, I think, follow-up to a question I had asked before about the depreciation panel. I just wasn't clear. I think yesterday, Attorney Venora indicated the availability of his witness I just still need to let Mr. Dunkel know when to book his flight. So I wasn't sure if the 3 days indicated by the company is when the authority expects to hear depreciation.
I'm not exactly sure what to do either because the authority was expecting to hear depreciation on Monday. So I'm not exactly sure what to do either. I think we're on track to pick up a little bit of time. But I guess at this point, I would tell Mr. Dunkel to book for May 8th. As that's the first day that the company's witness is available, and I would expect to get to depreciation no later than the 8th.
Okay, thank you very
Okay.
much.
All right, anything else? Okay, then if you could introduce Dr. Woolridge, please.
Good morning, Dr. Woolridge. Dr. Woolridge, did you file initial testimony on February 8th, 2024? Oh, sorry.
Good morning, Dr. Woolridge. If you could please raise your right hand. I swear to tell the truth, the whole truth, and nothing but the truth under pains and penalties of perjury. Thank you. Please proceed.
Sorry, I jumped the gun there a little bit. Dr. Woolridge, we'll try again. Did you file initial testimony on February 8th, 2024, rebuttal testimony on March 13th, 2024, and various interrogatory responses pertaining to the Connecticut Natural Gas Company in this proceeding?
I did.
Do you have any corrections or amendments to any of those filings?
No,
Do you adopt those filings as your sworn testimony in this proceeding?
I did.
And with that, Madam Chair, the witness is available for cross-examination.
Thank you. And we are starting with the CNG company.
Yes.
Morning, Dr. Woolridge.
Well,
It has, especially in person. I'm going to ask you questions today. I'm going to focus my questions and page number references to your CNG testimony, I believe. And my question to you, am I correct? You submitted testimony for both separately for CNG and
I
SCG,
did.
correct? And if I ask you questions about your testimony, am I correct that generally your positions are substantively the same between both? Okay, thank you. So starting with, if you could go to page 15 of your direct testimony in this proceeding for CNG.
Yes.
And at line 7, you begin your summary of your assessment of current market capital conditions, correct?
Yes.
The market conditions you describe here are no more recent than calendar year 2022. Is that correct?
No, I don't think that's true. I mean, it talks about 2022, but we still have this rebounding economy that has continued to put pressure on prices and interest rates. We have post-COVID supply chain issues, most of which have been resolved, but really that was part of the prices that were pushed up those files. So I would say many of these have continued on, but most of them were tied to, kind of the lingering effects of COVID and kind of waiting for, inflation to slow down, interest rates to fall, that sort of thing.
Okay. So on lines 18 to 21, you provide your opinion that the prospect of a recession is likely based on the inverted yield curve, correct?
Yeah.
And you suggest here that this will put downward pressure on interest rates. Is that correct?
Historically, it has. I mean, I provide. I mean, obviously, I have discussion in the pages leading up to there that every time since 1955, we had an inverted yield curve. We had a recession, and when recessions occur, usually interest rates go down. Now, I mean, that's obviously my presumption. I mean, this yield curve's been inverted over a year and a half, and you see articles constantly about what's going on with the Fed and the economy, and everybody's looking forward to the Fed lowering the discount rate, but as inflation has kept up, I mean, obviously, but you see that, yeah, I mean, historically, you've always had a recession. It hasn't happened yet this time.
And And so here at page 15, you do project that interest rates will decrease in the future, correct?
I do, and I think if you look at Ms. Balke's testimony and her CAPM and risk premium, her longer-term rates are lower than her short-term rates. So that, I mean, I think there's a mutual expectation at some point interest rates are going to decline because the economy will slow down, inflation will slow down. Historically, that's what's happened.
On line 18 of the same page, you suggest that longer term inflation expectations are still at about 2.25%, correct?
Yes.
Does your testimony indicate any time frame for when the inflation rates will decrease in the future?
I don't have anything in particular. Obviously, on page 13, I show what the expectations are for inflation over 5 years, 10 years, and 30 years. But no, you're right. I mean, that's the big guess. Every time we come up on another Fed meeting, everybody say, and you see every time, if the economy's still warm, running too hot and that sort of thing, you see it have a hit on interest rates.
Okay. And are you aware that the core inflation remained constant in March 2024 as compared to February 2024, rather than decreasing?
I agree. Yes, it is. I mean, inflation has been very sticky, as the Fed likes to say.
Okay. Do you recall that you also filed testimony in docket 220808, which was United Illuminating's rate case in 2023?
I did.
And you provided a copy of that testimony in this proceeding in response to an interrogatory. Is that correct?
I believe I did. Yeah.
Okay. Well, just to make it easy, we pulled it up on the screen. And I'm going to reference you to the highlighted language. I'll give you a chance to read it.
Sorry, Attorney Bernard, could you just reference the interrogatory?
Sure. It was CNG, SCG, OCC 4, where we asked all copies of all of his recent testimonies.
Yes.
Okay. And so I'm showing you page 5, and on that page, you were projecting a recession in that case also. Is that correct?
Well, I mean, I'm making the point. Every time we've had an inverted yield curve, we had a recession. Every time since 1955. You're right. It hasn't happened yet. So I totally agree with you. Interest rates inflation has stayed high and the Fed hasn't cut rates. So we haven't had a slowdown, but and we haven't had a recession. So the economy's been good. Let's put it that way. And obviously that puts on a higher demand for, the inflation and interest rates.
Okay. And Dr. Woolridge, did you file testimony on Friday in a case in Oklahoma?
I did. I didn't know if it was filed or not, but I did file a case in Oklahoma.
Okay. And are the interest rates that you are using in your testimony in that docket higher than what the companies are using in this docket?
Yeah, I mean, if I think, and as a 30-year Treasury rate, I used 4.25% in this case, because that was the rate when the 30-year Treasury yield when I filed my testimony. It was also the 30-year Treasury when I filed my surrebuttal testimony. So it was the same. And since that time, it's gone up 50 basis points. So if I was filing testimony today, the 30-year Treasury I'd use 4.75%. Now, I think there's a good chance that's going to come down, but that's what I would use. Now, if you look at it directly affects my CAPM numbers. Now, my CAPM numbers when I filed testimony was 8.35% and 8.45%. If we suddenly were using 4.75% as a 30-year Treasury, those numbers are more like 8.85%. So they've moved up because higher interest rates, but it's still well below where my numbers are.
Mm-hmm. So can we ask for, I think this would be a supplement to the OCC's response to interrogatory CNG, SCG, OCC 4 to provide a copy of that testimony. And it's an Oklahoma case number PUD 2023-000087.
Yes, we can supplement that,
Okay,
that
thank you.
interrogatory response.
Thank
That
you.
was, I'm sorry, 00087 was the,
Correct.
thank you.
All right. Dr. Woolridge, I'm going to just change topics. Beta is used in the CAPM formula, correct?
Yes,
And beta is used to measure the relative risk of a company as compared with the market, correct?
yes,
And you apply the beta to the equity risk premium to estimate the risk premium for the company based on the beta for the proxy group. Is that correct?
yes,
And then you add the RF rate to that estimate in order to arrive at an ROE recommendation, correct?
correct.
Okay. So the beta that you are using in this analysis is the measure of the risk of the proxy group to the overall market, right?
That's correct.
And this means that the proxy group you use in the CAPM needs to be reasonably comparable to the subject company, correct?
Well, that's what we presume. That's why we use a proxy group.
Okay.
The risk, I mean, and I discuss it. I mean, I believe the risk of CNG is below the risk of the proxy group. I discussed that in my testimony. But yeah, in the CAPM, we're using the betas, the average betas for the proxy group.
Okay. Does the beta of a group that is not comparable to the subject company tell you anything about the cost of equity for the subject company?
I don't understand your question.
Well, for example, if you relied on the beta for a group of tech sector companies, for example, would that tell you anything about the cost of equity for CNG or SCG?
No, I don't believe so.
And so similarly, option contracts for a group that's not comparable to the subject company do not tell you anything about the return expectations for the subject company. Isn't that correct?
I wouldn't think so.
So you need to rely on companies in the proxy group to calculate the beta that are generally comparable to the subject company.
That's what I do.
Okay.
I mean, I've always
Yeah.
I think most of the people I see do this, but you see Wall Street firms, if they're doing valuation analysis, they do comp analysis all the time, but they'll go out and find comparable companies. So whether you're looking at valuation issues, you're looking at cost of capital issues, yeah, typically you use a proxy group to approximate the risk of the subject company.
So, and based on your testimony, I assume you would also recommend that the proxy group used to calculate beta should be consistent with the proxy group used to calculate the remainder of your cost of equity estimates, correct?
That's what I do.
Okay.
I believe so.
Okay. And in reviewing your CAPM analysis, you have relied on value line betas, correct?
And S&P Cap IQ
S&P.
betas. I've used both.
Understood. Thank you. And you've done this historically, right? Relied on this.
I used to, and I explained this in my testimony, that I used to use only value line, and there's unique things about value lines beta, how they estimate it. I mean, they use the New York Stock Exchange Index, which I don't understand. That excludes all the tech companies, so there's a lot of volatility in the market that's not captured in the New York Stock Exchange. But there's different, and it's all in my testimony. But you're right. I used to just use value line, and as I explained in my testimony, I also use Cap IQ now, and I do adjust the Cap IQ betas so they're consistent with the value line betas.
Okay. And you've testified for a number of years across the country, is that right?
Yes.
How many years would you say?
You really have to ask. I think the first cases I did were mid-late 80s. Let me put it this way, back then, no one believed the CAPM. That was crazy stuff to regulatory economics back then. Yeah, been a long time.
Okay. So in your experience, would you say, is it fair to say that the majority of witnesses, both for companies and for interveners, have relied on value line betas as a cost of capital?
I don't know. I mean, I see more and more witnesses using Bloomberg betas also and using other betas. So, I mean, I've seen more because obviously value line's only one source of data. And I've identified a number of issues with value lines betas. And that's why I've included Cap IQ. But there's so many sources of beta, Yahoo, you name it. It's it's like a lot of things, like we use different measures of analyst growth rates, for
Mhm.
example. But no, you're right. I mean, I always use value line for issues, so now I use cap IQ. But
Mhm.
I've seen more and more using multiple.
Yeah, but you've stuck with your approach, correct?
Well, I use cap IQ too now.
Yeah. Value Line has always used the NYSE, is that correct?
What's that?
Has Value Line always used the New York Stock
As
Exchange?
this, as the index, yes.
Yeah, okay. Have you ever relied upon a 6-month beta in your analysis?
Not that I can think of. I mean, it depends. I mean, betas are measured over different time periods.
Mhm.
You know, cap IQ, I mean, Value Lines uses 5 years of weekly data. Cap IQ uses 5 years of monthly data. So different sources use different timeframes. In addition, in Bloomberg and others, you can actually set the time frame. I want the 2-year beta, the 5-year beta, whatever. So I mean, the one they publish is the 5-year beta, but if you subscribe to Value Line, you can get betas for other timeframes.
Okay. Have you ever, would you typically use a beta of less than 2 years?
I haven't, but I mean, the issue could be obviously beta is historic in nature and those are historic relationships. So obviously near term
Mhm.
timeframe may be a better measure if things are changing in an industry or a company.
Okay. Now, the two sources that you rely on, both Value Line and Cap IQ, those sources rely on historical data to calculate beta, correct?
Yes,
And neither of those sources interpolates data points that were unavailable. Isn't that correct?
not that I know of.
Okay. In other words, so the calculations run by Value Line and Cap IQ are using only actual observed data points to calculate data based on historical relationship between the company and the market, correct?
I would say, yeah, as far as I know, yes.
And would you agree the only way to calculate the relationship between an individual stock and the market is through the use of actual data, correct?
I would think so. That's how I've always done it.
Yeah.
And that's how I've seen it done.
Yeah. Thank you. And so in thinking about the underlying data points used in an analysis, is it also true that the analysis is only credible if the data about the company and the market were or are actual observations?
Yeah, again, I don't, it sounds like a hypothetical. I don't know if I understand all the parameters here.
I'm just asking, it was a follow-up question to the last one based on, so in order to be valid, I think we've agreed that the analysis would be based on actual data.
I think
Okay.
actual data is, yeah,
Okay.
important. That's why we use it.
Thank you. So in your testimony, you rely on the DCF model as one of the cost of equity estimation methodologies, correct?
Yes,
And in fact, you place primary weight on that model result, correct?
I do, yes.
And your recommended range is between 9.0 and 9.5%, correct?
Yes.
And the DCF is the primary methodology that you are using to get to that range.
I give more weight to that than I say I give more weight to it. I don't, I think Ms. Bulky and I do similar things. You don't necessarily say, I give 100% weight to one model or another. You kind of mix it up.
Mhm. So I use the word primary. I mean,
Primary, yeah. I mean, I focus more on that.
okay. And in developing your DCF, you rely on a constant growth DCF model. Is that correct?
Yes,
And is that the form of the DCF model that you typically use when estimating the cost of equity for a natural gas distribution company?
yes.
And the reason that you rely on the constant growth DCF model rather than a multi-stage DCF model is that the natural gas industry is in a steady state or constant growth stage,
I
correct?
think generally utilities, gas companies, electric utilities are in a steady state. Obviously, if it was still in a high growth stage, you may want to use, I mean, typically in valuation on Wall Street, when they will do a multi-stage model where eventually the terminal growth is tied to GDP in one way or another.
In the last 10 years, what is your estimate as to the percent of cases in which you submitted ROE testimony where you relied on the constant growth DCF model?
Well, I've always used a constant. I don't know if I've used a multi-stage.
Okay.
But as far as I know, I've always used it. If
Okay.
not, I've just forgotten one or two instances. Maybe I duplicated somebody else's model. I don't know, but
Okay.
primarily that's what I do.
Okay. And so the flip side of that is in the last 10 years, what is your estimate as to the percent of cases in which you submitted ROE testimony where you relied on a non-constant growth DCF?
I don't remember. So I pretty much none. I can't remember any.
Yeah, thank you. Just one follow-up on the earlier regarding CAPM result. You mentioned that your CAPM result would be higher now. So if you weigh that model result, would the low end of your range increase?
I'm not sure because it was more at 8.35. It was more of an ordinal measure than, I was just looking at, I mean, obviously I didn't give a lot of weight to those numbers down there. Now, I mean, given up, I mean, the lower end of the range will, if you take like the DCF for my combo group is 8.85%. So it's still down below 9. And clearly CNG, Southern Connecticut are much less risky than the gas proxy group anyhow, and the combination group. All you have to do is look at S&P and Moody's, and they tell you one thing. And plus they have a much higher equity ratio than these gas companies and combination companies. They're less risky. That's why I didn't use 9.25. I used 9.125.
One moment. Thank you, Dr. Woolridge. We're all set.
Thank you.
Thank you.
Thank you. Authority staff, please.
Morning.
Good morning.
Morning, Dr. Wurz. Good to see you again.
Nice seeing you guys.
We chatted a little bit about betas, so I'm going to touch upon that just a little bit. Should the average value line beta for all stocks in their universe be 1?
It should be. That's what's strange about it, because the average value line beta is 1.1. It tells you one thing. You're right. I mean, it's a good point. You look at, first of all, they provide betas for their core group of 1,700 companies. The average beta is 1.1.
Okay.
It's a weird measure.
Okay.
I haven't had time to study it and to actually see kind of other elements, but I mean, it's obviously using the New York Stock Exchange indexes doesn't give you a beta 1 for the market.
So you preceded my next question. So that's not currently the case. And we've seen have you seen an increase in the beta coefficients in the entire utility space?
I've seen, clearly betas. Yeah, I mean, and if you look at their adjusted betas, if you look, also you look at their weekly betas have gone up. But, Bloomberg uses weekly betas. They're higher. But if you look at monthly betas, they're very low. I mean, you look at Yahoo. Yahoo does not adjust their betas. The average utility betas is pretty low. Cap IQ, they provide a monthly data. They don't adjust it. The average, unadjusted beta is like 0.7. So no, you're right. Those betas are they're unadjusted depending what index you're using, when you're using weekly data, monthly data, that sort of thing. It's going to be different.
Okay. And do you think it's it could be a function of how it's possibly measured, or is there an increased risk in these names?
I don't know. I mean, you look at credit ratings, you look at other things, clearly there's a perception of the weekly betas have gone up. There's no doubt about it. But even the unadjusted, even the unadjusted betas are a little bit higher, but they have gone up a little bit. But I don't know if it's because it's weekly data or whatever.
And given that the entire universe is above one, more than likely higher beta stocks have moved up as well. So there's no indication that these betas, that the utility space would ever match, say, a biotech stock or a tech stock or something like that.
Yeah, I haven't studied that. I really couldn't give you a good answer.
Okay. Let's move on to the proxy group. Do you consider the total number of companies an important factor in determining your proxy group?
Well, yeah, I think you need a proxy group 8 to 10 anyhow.
Okay.
Just because, the reason we use a proxy group is because we know we're measuring these things with error. So you take a number of observations, so you kind of average out the errors in, like on DCF, dividend yield, growth rates, and that sort of thing. So you use a proxy group, and it's universal on Wall Street. That's how you value companies. That's how you assess cost of capital, that sort of thing. So yeah, you use a proxy group and you need enough companies, because if you add or delete one company and you have a small group, it can significantly change your results.
So would you say that having a larger proxy group smooths out certain errors that we have in our models and stuff like that? So the
Yeah,
smaller.
I mean, obviously a larger group, it depends on how you set your bounds. It could be that less similar to the company under suggestion because you have more companies, but the advantage is, you have more observations to measure what you want to measure, which in this case is the cost of equity capital.
Okay, thank you. Moving on to risk-free rates. If risk-free rates move higher, does this stand to reason that ROEs must move higher with them?
I show that in my testimony. I mean, if you look at my testimony, I did a study on pages, I did a study on pages 18 through 19, where I showed that no, interest rates, interest rates have moved a lot in recent years. Authorized ROEs haven't. They never went down with rates during COVID. And as rates have come back up, they haven't gone up nearly as much as interest rates.
Okay, thank you. Moving on to growth rates. Do growth rates change constantly throughout the year, or is there a pattern or a set way that the street has developed in ascertaining what a growth rate will be for the company for the year?
What growth rates are you talking about?
Let's go with the EPS.
Huh?
EPS.
What measures of GPS growth?
No, EPS, earnings per share.
Yeah, well, earnings per share changes every quarter.
Every quarter. Okay. And so have the growth rates for this proxy group changed since you filed your testimony?
I don't think so. I checked one. I haven't read. What happens is, okay, we're using value line, we use ZACs, we use other measures. And as it turns out, they tend not to change that often. Occasionally, when companies announce a change in earnings, the long-term earnings forecast growth rate will change, but not always. A lot of times, these growth rate estimates stay constant for a long period of time.
Okay, and I know you've answered this, but the DCF model, we use the word primary, I guess. That's your primary model.
I've given primary, yeah.
Okay. And do you utilize dividend per share and book value per share growth rates as the inputs to your growth estimates for your DCF model?
I use a projected earnings, dividend, and book value per share growth rates from Value Line is one of my growth rate measures. I use various measures of growth. Because I don't think there's one measure that measures everything. But yeah, that's one of the measures I use because, hey, the DCF model, those future cash flows are not earnings, they're dividends.
Okay, and typically, do you find that the EPS is always higher than those DPS or VPS?
Usually they are. Let me point you to my testimony where I've done a study on this. And if you look on page 89 of my testimony, table 12, I show over the long term, for the S&P 500 anyhow, earnings per share growth rate have averaged 7%. Dividend per share growth rate have only averaged 5.81%. So I've observed over time that the earnings growth rate, the dividend growth rate's a little bit below the earnings growth rates.
Okay. And moving on to dividend yields, since you filed the testimony, have the dividends yields changed? And if so, to what degree for your DCF?
The last I checked, which was like 3 weeks ago, they were still pretty much the same.
The same. So that, could we assume that the stock prices have stayed the same as well?
Well, the prices have gone up, utilities increase their dividends every year, so the stock price has to be going up too if the dividend yields are going to stay the same.
Okay. And would you agree that ROE tends to measure the investor's required return on an equity investment?
That's what we're supposed to trying to get to.
Okay. And when we say investors required return, what kind of time frame do you think we're specifying?
Long term.
Long term. So long term being next year or 2 to 5 or 5 to 10
years or more.
10 years.
That's what you're trying to measure, the long-term expectation of investors. It's going to change, it's going to react to short-term events as investors change their expectations about the long term. But in the end, stock prices reflect very long-term expectations. And as a result, that's what we're really trying to get at. But there's short-term things that will get an indication of changes in the long-term growth rate. And we look for changes in earnings projections as indicative of that.
Okay. And moving on to the Federal Reserve, have there been any changes in the Fed guidance as it relates to interest rates or macroeconomic changes since the rate case application in early November? And how would that have an effect on the cost of equity?
Well, I think what's happened is we see it in the press, as we come up on a Fed decision, as information about the economy and interest rates and inflation come out, what happened? Well, I guess what happens is, these numbers continue to say inflation's a little high, the economy's a little hot. So the Fed continues pushes back when they're expected to cut some of the discount rate. So it's kind of it's an evolving thing that, you see all the time on CNBC and other financial news networks where they're talking about, well, when's the Fed going to cut? How many cuts this year? Are they going to have to put them off because the economy's still? It's an evolving situation.
And is there a greater likelihood that the Federal Reserve will cut rates or raise rates within the next 6 to 12 months?
If you look at the data, the expectation they're going to cut rates at some point. Now they're saying maybe only one cut in 2024. One point there was 3 cuts in 2024. Why they move that back? Because the economy is still pretty strong.
And we've heard in the news, as you mentioned, higher for longer, but we haven't heard yet the prospect of raising rates.
Well, they don't tell you that.
They won't let you.
They aren't going to. You learn that when they make the announcement.
Okay. And what are the capital market expectations for long-term inflation?
Well, I highlight that. The best way to find that, economists are terrible at forecasting anything. I don't waste my time with their forecasts. Where you can see it is on page 13. You look at the Treasury, the yields on Treasury inflation securities, the tips, and it tell you what investors expect for long-term inflation. It's picked up a couple of times, but long-term, it's still now when I found my testimony, it was 2.25%, just a little bit above that now.
Okay. Thank you very much. That's all I have.
Thank you.
Thank you. Attorney Inoue. Attorney Wright. EOE. Commissioner Karen.
Oh, no.
No question, Madam Chairman.
Thank you. Dr. Woolridge, a couple of quick questions for me. Is it fair to characterize beta as a measure of volatility?
Relative measure of volatility, relative to the market.
Is that to say that beta is not the same thing as volatility?
No, it's a different measure of volatility. Volatility is measured by the standard deviation. And beta just measure the volatility relative to the overall market.
Thank you. As part of developing testimony here or in other instances, do you ever talk with actual utility investors about how they elect to invest in a specific stock?
Do I talk to specific? I have 100 investors in my fund. I talk to investors a lot, but they're investors in my fund.
Okay. When deciding whether to invest in a stock, does the investor focus more on beta or volatility or perhaps more on future-looking growth projections?
I have a kind of pat answer on that, which is the world of finance. There's two magic words in finance that explain everything: risk and return. And so I tell my students, you can always get, you don't know an answer on an exam, just put risk and return. Finance exam, you're going to get 50% credit. So different people are having different measures of expected return and risk, but that's presumably why you invest, because you like the return given the level of risk. Now, your level of risk may not be beta. Most of the market evidence suggests that investors aren't rewarded a lot for non-beta risk. That's the old academic studies of this. But individual investors may measure risk a different way. Historically, you're not rewarded for taking non-diversifiable risk. In other words, risk is not related to beta. Historically, you have, but.
All right, thank you. That's it for me. Attorney Talbert's legal. Attorney Wheel, do you need a moment to consider redirect?
Yes, just 5 minutes, please.
Okay.
Just have brief redirects. Dr. Woolridge, do you recall a question from company counsel regarding your testimony in the UI rate case, docket number 220808, specific to the testimony about the inverted yield curve and expectation of recession?
Yes.
In that testimony and in this testimony, are you offering your expectation of what's going to happen, or are you offering your analysis of investors' expectation of what's going to happen?
I mean, it's not it's my observation. My observation is that every time since 1955, we had an inverted yield curve, we had a recession. What happens during the recession? Interest rates go down. I have a graphic of it, which is long-term, so you can't see all the individual things. But no, that's not that's my observation based on what's happened historically.
And is that observation offered to support your analysis of what investors are expecting?
Well, it's to support what level of interest rates you should be using right now. I mean, actually, if you mean, and again, I'm just making the observation what's happened historically. And if that happens, interest rates will probably go down.
Thank you. No further questions.
Thank you. Thank you, Dr. Woolridge. You are excused for the moment.
Thank you.
I'll call up the Office of Education Outreach and Enforcement panel, and the OCC is up first for cross-examination. Okay, Attorney Lopez, can you introduce your witness, please?
Yes, good morning, Chair Gillette, Vice Chairman Witkowski, Commissioner Karen. Mr. Rothschild, whenever you're ready, if you wouldn't mind, please stating your full name and position for the record.
My name is Aaron Rothschild. I'm president of Rothschild Financial Consulting.
Thank you. Mr. Rothschild, if you could please raise your right hand, I'll administer the oath. I swear to tell the truth, the whole truth, and nothing but the truth under pains and penalties of perjury.
I do.
Thank you. Attorney Lopez?
Yes, thank you. Mr. Rothschild, as part of your work in this docket, did you provide pre-filed direct testimony, surrebuttal testimony, and interrogatory responses into this docket?
I did.
And do you have any additions or corrections to your testimony or interrogatory responses today?
I do not.
And do you adopt all of those items as part of your sworn testimony in this proceeding?
I do.
Thank you. The witness is available for cross-examination.
Thank you. Attorney Wheel, please.
Thank you. Good morning, Mr. Rothschild. Tom Wheel for the Office of Consumer Counsel.
Good morning.
I just have some questions about starting with your direct testimony on page 34. There's a chart labeled, I believe, chart 7. Oop, hold on. That's chart 6. I want to ask about chart 7. That's actually on page, yes, 34. I was confusing the PDF for the page numbers.
Okay, I'm there.
I read the testimony introducing the concepts shown in this chart, but can you explain what the different colored lines represent on the chart itself?
So the different colored charts represent different times that the analysis was done. So this is the term structure of volatility. So it shows what the volatility expectations of investors are based on stock options over different time periods. So for example, 1 month, 2 months out to 24 months into the future. And each one of the different colors has to do with what those option data said at different dates. So the one at the very top, the blue line, was taken for stock option data on March 17th, 2020 at the COVID peak. And then there's others. There's 5 different dates, and one of them, the most recent being as of December 26, 2023.
Okay, so does this demonstrate, for instance, on the blue line showing COVID peak, that investors expected short-term volatility over the first year or so, and then for that to reduce into the 13th through 24th month?
Yes, during the initial outbreak of COVID, there was extreme uncertainty, which made sense, and it was revealed in the option data, which showed that investors expected a wide range of possible outcomes for stock movements in the short term. It still was high in the long term, but less. So it kind of looked like the investors thought that things may become a little less uncertain over the coming years, but at the current over the current time period, over the most recent months, they thought uncertainty was extremely high.
Okay, and then so if I compare that to the yellow line, which you mentioned is for the most recent date on this chart, December 26, 2023, it looks like relative to the blue line, there's less expected volatility, although it's expected to slightly increase over time.
That's right, just a slight increase, but there's the difference is dramatic. It's the volatility expectations over all time frames, other than 1 month all the way out to 24 months, are much lower now than they were during the initial outbreak of COVID. Yes.
Thank you. And on page 35, the following page, there's a 3-dimensional chart, which kind of warped my brain a little. Could you explain what the different color codings and the sort of three-dimensionality of that chart, how that works?
Yeah, so this is a 3-dimensional version of the chart we were just discussing. So each of those lines on different time periods were basically slices of this 3-dimensional chart. So if you look, for example, at the real peak in that 3-dimensional chart, which was right when the COVID outbreak, it was high. When you look over the 3 dimensions, the closest part on the y-axis is shows a very, very high over a short time period, and as it goes out, it's over to the 24 months it went down. So that matches the lines that you just saw, but they're, instead of going from left to right, those are going from front to back into the 3rd dimension. So you can see during COVID it was extremely high, and it's of course moved around at different times, but that enables you to show those slices over time. And you can see also currently today they're relatively low, and the different colors kind of help you to be able to picture just how low they are. So the blue color indicates quite low from a 10, the VIX index being kind of really on the low side, close to the range of 10 or 12. And that's what we're seeing in the short range. That's why you see the blue as you get to the most recent data on the right of the chart, which is blue. And then the orange section is a little bit higher.
Thank you. And these charts, are they offered to support the notion that are they offered to support your use of option implied betas?
These are the building blocks of the option implied betas. There's the 2 main components, which are option implied volatility, which is what we're talking about here, which this is the looking at option implied volatility over different time frames. But that's the building block for option implied beta, is this option implied volatility and option implied skewness, which we have some of the charts before. And so that is what builds into the option implied betas.
Thank you. I did see on page 39, there's a chart 10, that's demonstrating the skewness concept. So if I understand this correctly, a positive skew means that there's a shorter tail on the front end. Is that, am I reading that correctly?
That's right. So it's kind of a little counterintuitive. A positive skewness, you see the the higher part of the probability distribution to the left on the negative side. But as you can see, the tails are much larger going out on the positive side. That's why they call it a positive skew. Investors means that they think there's a greater chance of a large increase. With a negative skew, a greater chance of a large decrease.
Okay, so if we looked back again at, are those skews shown on the previous charts we were just talking about? In other words, for the first chart on page 34, the blue line demonstrating the COVID volatility, is that demonstrating a negative skew?
That doesn't show the skewness there at all, just the option implied volatility. So you'd have to go to the next, so it'd be a moment in statistics from the volatility to the skewness. So that doesn't address that there. Yep.
Thank you. Switching to your surrebuttal testimony on page 11 on line 5, it says, although we should not blindly accept new cost of equity methodologies, we equally should not blindly use methodologies just because they're commonly used in utility rate cases. Are the references to methodologies commonly used in utility rate cases those that don't use option implied data to measure the cost of equity?
I certainly don't think that all methods that don't use options are problematic. I don't want to imply that, but I do think many of the commonly used methods do have problems. And we had a discussion earlier about value line betas. They've been used a lot. They have problems that I talk a lot about in my testimony that Dr. Rolwich was discussing. So I certainly don't think we should just say it's methods because they've been used in the past, we should use them. I think they should stand up to criticism and tests.
Okay. Thank you. On page 15 of your surrebuttal testimony at line 10, you note that using options data for measuring investor expectations is a widely known and used practice. Can you give some examples of where that practice is widely known and used?
Well, I guess the biggest example would be the VIX index. It's often referred to as a fear index. That's very commonly referred to, including in utility proceedings. So you often see that, and also the skew index, a little less than the volatility index, but that's also related to options. A number of the Federal Reserve banks use it. The Federal Reserve Bank in Minneapolis, the Federal Reserve Bank of Atlanta, and Microsoft recently has published a tool to be able to look at option implied probability distributions, because they had explained that these are commonly used by many large financial institutions, but sometimes individual investors didn't have the resources to be able to do that, but now that's why they're making it freely available. So,
thank you. In your opinion, is there any reason why a regulatory commission like PURA should not be using the same tools as Federal Reserve banks and large financial institutions to measure investor expectations for the sake of determining an appropriate authorized return on equity? I
would strongly recommend they consider those. Certainly that we shouldn't just say using 5-year historical value line betas forever. I mean, that's I highly recommend not doing that. I mean, that's being very, it's just really limiting your the scope of determining what the cost of equity is. Yeah.
Thank you. On page 44, back to your initial testimony, on line 11, you state, the cost of capital is the return investors require to provide capital to CNG based on current capital markets. And on line 13, there's a reference to the authorized return on equity matching CNG's market-based cost of equity. Is that the goal, that the authorized return on equity should be equivalent to CNG's actual cost of equity?
Yes, it should be. That would be the goal, and which would be consistent with regulatory principles, would be that the authorized ROE should be consistent with the actual market-based cost of equity.
Thank you. And when you say market-based cost of equity, where does a utility company get its equity? Sorry, where does the utility company get its capital in exchange for equity?
It raises equity in capital markets. They have an investment bank that would help them issue equity, and investors would purchase the equity.
Okay. if a utility company is not publicly traded, do you know where they would access equity capital?
If they're a subsidiary of a publicly traded firm, then it can, the parent company can provide an equity infusion. Or if they're not publicly traded, they'd have to raise it as a private offering from investors.
Okay. Thank you. Page 76 of your testimony discusses CNG's proposed capital structure of 55% common equity. And you take the position that 47.2% is the more appropriate ratio. And I did look at exhibit ALR 5, page 5. I think that's the last page of the PDF of your initial testimony. Just looking to confirm, it looks like what you've done is evaluated the actual historical capital structures of the companies in your proxy group, and that's how that 47.2% number was derived.
You're looking at ALR 5, page 5.
Yes.
That's, I do show the historical, but the 47.2 is just based on the most recent data that was in value line there. And that was the average, which was 47.2%.
Okay. And what, if you have the exhibit open, which column is showing the most recent data that you used to derive that average? Is it the last column there at labeled 15 for equity ratio?
Yes, that's what shows that the 47.2%, yes.
Thank you.
Sorry, just to be clear, are we speaking about exhibit ALR 5, page 5?
Yes.
Okay, thank you.
You note on page 76 of your initial testimony on line 18 that capital structure has a major impact on revenue requirement, and that if PURA adopts an equity component of the capital structure ratio that's higher than you've recommended, should be a corresponding
Security has been alerted.
I'll just pause for a second.
5 seconds. Exit now. Exit now.
I don't know why I have such a hard time.
Exit now. Exit now.
I don't know why I have such a hard time.
Exit now.
I'm gonna block the other door from now on.
Exit now. 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 Exit now.
The keyword both ways.
Exit now. Exit now. Exit now.
Wait, close the door.
Exit now.
That took a minute.
My apologies. I'm gonna go out that door from now on. I seem to have a problem with this door. I don't know what it is. Apologies. Thank you.
Thank you.
Thank you.
Are we still on the record?
I hope that wasn't on the record.
I'm sure it wasn't. I'll start my last question again, Mr. Rothschild. I was referring to page 76 of your initial testimony, line 18. And I'm quoting here, saying capital structure has a major impact on revenue requirement. And also quote, if PURA adopts an equity component of the capital structure ratio that's higher than I've recommended, there should be a corresponding reduction to ROE. Does a company's capital structure affect its financial risk and therefore its actual cost of equity?
Yes, a higher common equity ratio is going to be lower a lower financial risk.
And with a lower financial risk, what effect, if any, does that have on the cost of equity?
Yeah, it has an impact. It lowers the cost of equity. I think I'm not the only one who says that. You know, it's pretty commonly understood, and I make an adjustment based on some research that I've done.
Thank you. And I saw that your testimony includes a recommended adjustment based on adjustments to your proposed capital structure.
That's right.
Thank you. And on your surrebuttal on page 28, line 19, you note that, quote, utility companies have an incentive to include as much common equity as possible in their operating companies because it results in higher rates. Is that because the cost of equity is typically higher than the cost of debt?
Yes.
So is that what you're referencing on page 76, again, of your initial testimony when you said that capital structure has a major impact on the revenue requirement?
Yes, that's right. If a capital structure that's authorized with a higher common equity ratio, all else equal, it's going to lead to a higher rate of return and a higher revenue requirement. Yes.
Thank you. Going back to your initial testimony on page 14 through 15, apologies for bouncing around. You discussed the equity return expectations of major financial institutions, and there's a chart on page 15 showing a range of ROE expectations from 6.2 to 9.0. Do you see that?
Yes.
And those represent the range of returns across the entire market?
That's right. These are not for utility companies. These are for the overall market. So, for example, the Horizon Actuarial Services, they have one of the surveys was for U.S. equity large cap, and that had their surveys from like large pension funds and so forth had a 5.6% to 10.2% expectation return for the overall market with a 50th percentile of 7.3%. So that's for large caps, but they also have small caps and yeah.
Okay. I'm sorry to switch back again, but your surrebuttal testimony on page 5, line 5, you note that, quote, Ms. Bulkley correctly states that Hope and Bluefield standards require that authorized ROEs are commensurate with returns required by investors elsewhere in the market for investments of comparable risk. The returns we just talked about referenced on pages 14 through 15 of your testimony, ranging from 6.2 to 9.0, are those earned by investments of lower risk than utilities?
No, those would generally be higher risk. Yeah.
Thank you. In fact, your testimony says on page 15, line 12, that most companies that make up the S&P 500 operate in highly competitive markets. Are those highly competitive markets generally riskier than the utility industry?
Yes.
Thank you. On page 96 through 97 of your initial testimony, you discussed the national average authorized utility return. Are you suggesting that if PURA sets CNG's ROE, authorized ROE at your recommendation, investors will still be interested in investing in the company, even though its authorized ROE would be below the national average?
Yes, we have to look to the return that investors will actually receive. If there's an authorized return for a utility company, investors can't earn that because they have to pay a premium over book value. So it's not a valid comparison. So if the authorized ROE for a company is lower, that does not mean investors would not purchase that. So it's not a valid comparison. Yeah.
In your opinion, is the national average of returns on equity authorized by other various utility commissions equivalent to the actual cost of equity for utility companies?
Well, even if it was at the time, the market data is showing that it's not, because the stock prices of utility companies have reacted to that. They've been willing to pay a premium. So at this time, the data shows pretty clearly, no, those authorized ROEs are higher than the returns demanded by investors.
Thank you. And I think as your testimony points out, do you believe that investors would prefer to earn a higher return than the return that you've suggested?
Of course, and anyone who's making investments for their retirement or so forth would like to earn as high a return as possible.
Thank you. And in your opinion, is Pura's role here to ensure that investors earn as high a return as possible?
No, absolutely not. That it should be to ensure that they earn enough. Of course, it's in the best interest of consumers for them, for utilities to be able to raise money, but not excessively. The regulation should be as a replacement for competition, so we have to make sure they earn a reasonable return.
Thank you. We have no further questions for this panel.
Thank you. We'll continue with cross by the company, please. Attorney Venor, the mic, I think.
Thank you. Good morning, Mr. Rothschild.
Good morning.
Mr. Rothschild, I'm going to be asking you some questions today. I'm going to focus on your CNG testimony, but just to confirm, I know you submitted testimony, both direct and rebuttal testimony in the docket for both companies, correct?
That's right.
And in asking you questions today about your testimony, am I correct that your positions are substantively the same for both companies?
That's right.
So if I refer to the CNG testimony, the concepts would be the same as the SCG testimony?
I can't think of a place where that'd be different. Yeah.
Fair enough. That's, so just starting out, Mr. Rothschild, an options contract is an agreement between two parties to facilitate a potential transaction at some future date at a preset price. Is that correct?
You're referring to options for equities?
Yes.
Yeah, I would agree with that definition. Yeah.
So in that framework, the parties are essentially agreeing to a forecasted price in an options contract, correct?
I'm not sure what you mean by forecasted there.
Well, I think in the prior question, I asked you whether they were, the parties were essentially anticipating a preset price at a future date. That's what I meant by forecasted.
I'm just making sure I understand, because the two parties may or may not have the same forecast for the stock. As a matter of fact, they probably don't. I just want to make it clear. They're not agreeing that the stock will be at a certain price. They're just agreeing, basically it's an agreement for someone, one investor has the right, but not the obligation to buy at a certain price. So they're agreeing on what the option price is, but they're of course not agreeing necessarily on what the price will ultimately be.
Okay. So at page 62 of your testimony, beginning at line 14, I'll just let you get there.
Page 62, line 14.
Yes. beginning at line 14.
Where it starts with at the end of July 2019?
Right.
Yep.
And that's where you describe a call option, correct?
Yes, that's right.
Okay, and I'll read the block quote just to make, just a level set. There you say, at the end of July 2019, Apple stock was trading at about $215 per share. Why would anyone pay for the right to buy a stock higher than the current price? Investors who purchased those call options thought there was a chance Apple stock would be trading higher than $230 on January 17, 2020. And those options gave those investors the right to buy Apple stock for $230 and profit by selling it at the market price on that date if it was higher. The price of Apple stock was $317.98 at the close of trading on January 17, 2020. Therefore, the investor who purchased this call option for $635 on July 31, 2019 earned a profit of $8,163. Did I read that correctly?
That's right.
Okay. And in your example, the investor made money because the price in the future was higher than the price that was agreed to in the option agreement, correct?
That's right.
So here you're demonstrating that options reflect a guess about future market value that may or may not actually occur. Isn't that right?
That'd be the same for someone buying the stock as well.
If the actual market price on the date of the sale was the same as the price in the options contract, nobody would have made a profit in that example, correct?
No, the person who sold the option would have made a profit.
So in the transaction, value is transferred from one party to the other on the maturity date of the option if there's a difference between the actual price and the option price, correct?
There's also a value when the option is purchased, the investor of the option pays for that option. So there's a transfer of value at that time as well.
Okay. And so one party in the transaction profits at the expense of the other party, correct?
On that one transaction, it depends if they have a portfolio of options, that's not necessarily true at all. But for that one individual contract, yes.
Okay. Now, Mr. Rothschild, you've read Ms. Bulkley's direct pre-file testimony as well as her rebuttal testimony, correct?
Yes.
Okay. And do you recall that she cited to an article in her rebuttal testimony entitled "The Put Call Ratio Says Get in the Market Now," published by Forbes on September 22nd, 2022?
I did read that article.
Okay. And in your rebuttal at page 4, lines 14 through 18, you contend that the article published by Forbes supports your methods, correct?
What page was that in my rebuttal?
Page 4, lines 14 through 18.
Excuse me one sec. Let me open that. Sorry, one sec. I had the wrong rebuttal.
Okay.
I can.
That's good. Thanks. Okay, so what line number again?
It was, Sir Rebuttal, page 4, lines 14 through 18.
Yes, I read that.
Okay. So in that Forbes article, do you recall that the article notes that, quote, "It is widely known that options traders, especially option buyers, are not the most successful traders. Option buyers lose about 90% of the time." Do you recall that in that article?
I recall the article saying that. Yeah.
Do you know whether Forbes has equated the options market to gambling in this article?
I know that they did speak about that aspect of options. Yeah.
Okay. And in referencing that article in your Sir Rebuttal, you note, you say the following: "The research Ms. Bulkley cites concludes that stock option data, parens, put call ratio, close parens, remains one of the most important and parsimonious information variables used by trades to predict market return." Do you recall that?
Yes.
And do you recall that while the article notes the importance of the put-call ratio, the conclusion of the article is that the put-call ratio is a contrarian indicator and that investors should do the opposite of what the put-call ratio is saying because option buyers have been so wrong?
The important piece is I do not use the put-call ratio anywhere in my testimony to calculate the cost of equity. I think what's important is this article is saying that one of the most valuable places to look for investor expectations or for looking at changes in market are stock options. But I do not use the put-call parity in my methodology.
Were you aware that the article noted that, quote, "Like almost all measures of broad investor sentiment, the put-call ratio is contrarian. It has to be interpreted as the opposite of what it seems to say"?
But I don't use that.
And you also know that Forbes noted a contrarian view of the put-call ratio is one of the best signals of the future direction of the market.
It was interesting when I started working on stock options and an analyst was doing the work for me initially. He started to think, well, more calls are bought, that means the market's going to go up. Or more puts are being bought, that means investors think the market's going to go down. And I said, well, it really depends on the price of the options is really key. And that's the fundamentals of my analysis. I don't look at the put-call ratio in the way that article's looking at. I look at the implied probability distributions of the prices. So I just want to make it clear, I do not use this put-call parity or the ratio to determine the cost of equity.
So based on that, Mr. Rothschild, the conclusion you state in your Sir Rebuttal that this article supports your methods would be incorrect.
No, I think it does because it points to the value of stock options and what they reveal about the stock market. And that's why I think we have the Federal Reserve Bank of Minneapolis looking at it. We have Microsoft recently publishing a tool to show implied probability distributions for individual stocks. It's, let's say, what's the right term for it? It's almost profoundly obvious that stock options are relevant to stock markets and investor expectations. And this article just demonstrates it. It's just that they were looking at a certain kind of ratio and explaining it as contrarian. I think that supports looking to stock options. Absolutely.
I'm going to go to your testimony at page 45, lines 15 through 19. And you have a quote there about Warren Buffett and the markets, correct? I'll give you a moment to get there.
Page 45, where's the line?
Lines 15 through 19.
Yes. That's correct.
And here your testimony refers to Mr. Buffett as a quote, investment guru, correct?
It's fair to say, yeah.
And what do you mean by investment guru?
Well, I think he's just known for making a lot of money in the stock market by making good investments. Yeah,
So you'd agree he's a prominent investor, renowned for sound investments?
yeah, one of
Correct.
the most prominent
Okay.
in history.
Have you read or are you familiar with Mr. Buffett's letter to shareholders of his company Berkshire Hathaway that was issued on February 24, 2024?
I did not read that.
Do you know whether Mr. Buffett's recently discussed the regulatory climate for utilities?
I have not read anything about his statements on that.
Your testimony, at page 18, line 19, through page 19, line 1, you state here, I provide an expert interpretation of investors' return expectations as indicated by the current market prices of stocks, bonds, and stock options without attempting to predict future prices. Is that what that says?
Yes.
Okay. And if we go to chart 2 at page 26 of your testimony, this is a projection of where the secured overnight financing rate, SOFR, is expected to be as of September 2025, correct?
It's based on what investors expect. This isn't my opinion. This is the calculation of the Federal Reserve Bank of Atlanta using, among other pieces of information, options data. So this is not my projection at all. This is my using the Federal Reserve Bank of Atlanta's tool, a measure of investors' expectations.
Right. And but it's a projection, right?
Investors' expectations. I just want to make it clear it's different than an analyst expectation or my own expectation. These are the expectations of investors, not my own projections.
Okay. And if we go to chart 3 of your testimony, that is a projection of inflation, correct?
Again, the same as Dr. Woolridge was mentioning. You know, he said that he doesn't trust economists to forecast anything. I agree with him on that. And so he was looking to the TIPS market, which is their inflation protected bonds, and they can reveal what investors expect inflation to be in the future. So this, once again, it's not an economist projection. It's not my projection. These are investor expectations as indicated by capital market data.
And on chart 5, your chart 5, those are also projections, correct?
I have the same answer. That those are not my projections. These are based on calculations using capital market data.
We go to page 32 of your direct testimony.
I'm there.
And do you state here that the cost of equity for utility companies has declined even though utility stocks are underperforming that market? Is that what that says?
What's that?
Hold on one moment. Let me get there. I was reading from my notes. It's lines 12 through 13. The actual quote is, quote, additionally, market data indicates that the COE, cost of equity, for utility companies mostly declined in 2023 despite the relative underperformance of utility stocks. Correct?
That's right.
And then on page 40, lines 9 through 10.
Page 40.
Yeah, lines 9 through 10.
Yes, where it says, however, capital market data show that their COE has been declining in recent months and investors expect the COE to remain relatively stable in the future.
Yes,
Yeah.
yes. And so then on page 41, line 19, and carrying over to the following page, do you state here that you are using options contracts to calculate, quote, option implied beta coefficients and, quote, market risk premia to determine the cost of equity over the next 5 years?
This is line 19, starting on line 19.
Yeah, page 41, line 19 to page 42, line 2.
Well, I explain, maybe I should read it. I say option contracts for each expiration period allow us to calculate option implied beta coefficients, market risk premium, and thus the resulting COE for each investment horizon. Unfortunately, option contracts for gas utility companies only go out 5 to 9 months in the future, but there are a number of electric utility stocks that trade options that often go out to almost 2 years or beyond.
Thank you for reading that. So in fact, you are using options data for electric companies, not gas companies, for your cost of equity term structure analysis. Isn't that correct?
Yes, to show the term structure analysis, I use electric. Yeah.
Okay. And if we turn to charts 12 and 13 at page 43, this is electric data, not gas data. Isn't that correct?
That's correct.
And if we go to page 49 of your testimony.
And I just want to make it clear, the only reason I did it is because those option contracts are not available for gas utilities going out that far. I would have if I could have, and that's why. Yeah. Page 49.
Yes, page 49, lines 1 to 2.
Yes,
and you say here that I chose to use the same proxy group that Ms. Bulkley used in her direct testimony because I believe it contains companies that are comparable in risk to CNG. Is that what that says?
Or certainly comparable enough for this analysis, absolutely.
Okay. And Ms. Bulkley's proxy group is gas companies, not electric companies, correct?
That's right.
And you've not provided any analysis or discussion in your testimony demonstrating that electric company options data is similar to the options contracts for gas companies. Isn't that correct?
I believe I have. Yes. I mean, I am involved in cases in water and electric and gas continuously, and I can see there's a strong interrelationship between the cost of equity for these industries. And if you turn to, let's see. Actually, I don't show that here, but yes, I mean, I don't show the specific comparison between electric and gas here. But from my experience in working in many cases, there's a strong, these are all rate of return regulated utility companies. And although the cost of equity is not always the same, they're generally, you know, they're fairly comparable.
So, but you haven't provided any analysis, so that means we just have to take your word for it.
I don't believe I provided a specific analysis in this testimony, and I can just say on the record here, that's from my experience working on these cases, that they are relatively comparable.
In your analysis of electric company options data suggesting that the ROE for gas companies has decreased, actually, they'll strike that. Looking at chart 13 on page 43 of your testimony, please.
Page 43?
Page 43, chart 13.
Yes.
If we were to agree that options contracts for electric companies could be relied upon to assess directionally the ROE for natural gas companies, chart 13 actually shows the RFC electric leaps are increasing over the next 19 months, doesn't it?
Well, when I say that the cost of equity for gas utilities has gone down mostly in 2023, I'm not referring to this analysis at all. This is a term structure of the cost of equity analysis. So this is looking at moving forward. It's not talking about how the cost of equity has changed in 2023.
But given that, so ROE is forward-looking, this would indicate that there should be an increase in ROE, not a decrease, correct?
Well, I just want to make sure we're clear with my statement about the cost of equity for gas utility companies changing over time. You have to turn to page 124, chart E1, which shows the implied cost of equity for the RFC gas proxy group between April 2020 to December 2023. And there is where you have to look to see how the cost of equity for gas utility companies has been changing over time. And that's where you can see that there was a peak around November 8th, 2022, where the cost of equity for gas utility companies was about 8.82%. And by December 26, 2023, it had come down to 8.31%. So that demonstrates that is the case, that the cost of equity for gas utility companies has been coming down over that period.
On page 42, lines 1 to 2 of your testimony, do you state here that the options data for the electric companies have expiration dates that go out only 24 months or 2 years?
That's right.
So doesn't that mean that the electric options data that you're using covers only two out of the 5 years?
That's right. That's as far out as they go. That's correct.
And so to estimate the cost of equity going out for 60 months, you set the beta coefficient in months 25 through 60 equal to the beta coefficient in month 24 for each company in the analysis. Isn't that correct?
That's correct. So the main information we're seeing there is regarding investor expectations or the term structure of the cost of equity for the overall market, which I still think is extremely important, obviously.
Mm-hmm. So how could this analysis ever be legitimate when you have used the same plug number taken from month 24 for the remaining 36 months out of the total 60 months?
Well, I probably explained that's what I do. I mean, we're always working with the data that we have. I mean, fortunately, I got criticisms initially when I was using stock options because they only went out to 3 years for the overall market. Now they go out 5 years or more. And so I'm using that. And for the gas companies, they only don't go out to 24 months, so I can't do that. But for electric, they do. So I do the best that I can, as all of us do, with the data we have. I believe this helps really paint the picture for the term structure of the cost of equity in general, and also incorporating as much data as possible for electric utility companies. And I make that very clear in my testimony what I'm doing.
But to be clear, your conclusions for the electric leaps group for the months 25 through 60 are just made up, correct?
Absolutely not. I explained clearly that I'm keeping that number the same. I explained that, but it does represent what the options they're telling us about for the overall market.
But that's not based on actual data, correct?
It is based on actual data.
You just testified, though, that you put a plug number for those months beyond month 24.
I would object. This has been asked and answered, and Mr. Rothschild pointed to why he used that information and how he used that information.
I'm going to sustain. Attorney Venora, we can move on, please.
Sure. Mr. Rothschild, in your discussion with OCC, you talked about capital structure and you testified generally that a lower equity ratio would result in a lower cost of capital, correct?
That a lower common equity ratio?
Correct. Would result in a lower cost of capital, all else equal.
The opposite, a higher common equity ratio would lead to a lower cost of equity.
Yeah, just to clarify, so I was asking about cost of capital, not cost of equity.
So like the rate of return.
Right.
Yes, yes, because the cost of equity is higher than the cost of debt, it's going to lead to a higher rate of return when you have more equity. Yes.
And a lower equity ratio would mean a higher debt ratio, correct?
Yes.
And would you agree increased leverage also increases risk, correct?
Yes, all else equal, sure.
Yeah. And that increased risk is reflected in higher debt costs, correct?
It certainly can be, yes.
Mr. Rothschild, have you ever talked to a utilities treasury or financial manager to learn about the considerations that utility companies take into account when setting the capital structure?
Well, currently I'm having a discussion with the treasurer in a rate case for Duke Energy Carolina. So it's not a personal conversation, but it's an intense conversation nevertheless.
And did they tell you that the reason that there's equity in the capital structure is for higher earnings?
Well, the treasurer for Duke Energy Carolina was explaining that my recommended capital structure was not appropriate because, as you're suggesting, it could increase the cost of debt. And then they calculated how much it would increase the cost of debt. They're arguing it could potentially lead to a credit downgrade for Duke Energy Carolinas, which they said would then increase their cost of debt by possibly 10 basis points, which by my calculation would be between depending on how I calculate it, between $3 and $17 million increase in the cost of debt if you assumed that they issued all of their debt today, new debt at the higher rate. But if they adopt my overall recommendation, it would save consumers about $150 million. So his attack, this treasurer, back to me was, you have to be careful to not, we're talking about potentially saving consumers $150 million because they might have to pay $3 to $17 million more.
Did they say that the credit rating agencies look closely at capital structures to determine whether there's an adequate cash flow and or cost of capital?
Well, absolutely. That comes into calculating the credit metrics. Capital structure is an important piece. Absolutely.
And did they say that their lenders require there to be certain equity levels in order to keep the cost of debt at a reasonable level?
Can you repeat that?
Did they say that their lenders require there to be certain equity levels in order to keep the cost of debt at reasonable levels?
Has this treasurer at Duke Energy told me that? Did he tell me that?
Well, I'm
Sorry, I'd
whoever
just
you're
like
talking
to,
about.
sorry, may I just ask, what are you specifically referring to? Just a conversation? Or is there something in the record you're citing to?
Sure, what he just testified to. I asked him if he has ever talked to a utility treasurer or financial manager about the speculation that he offered up in his prior testimony. He said yes, and I asked him some follow-up questions about it. That's all. So the last question I had on this, I'll just repeat it. Did they say that their lenders require there to be certain equity levels in order to keep the cost of debt at reasonable levels?
He didn't give me a specific level. I mean, we discussed the credit metrics and did a lot of calculations, but he did not tell me that I recall a specific common equity ratio that was required.
All right. Lastly, Mr. Rothschild, do you recall the date on which you were retained for this docket?
I don't recall offhand the date that I was retained, no.
Is that information that you could find and provide to us if necessary or if requested?
Just wondering, what's the relevance
Well,
of the objection and relevance to this hearing?
well, let me go through my questions. Maybe we can come at this a different way. Mr. Rothschild, did you provide a proposal for services prior to being retained in this docket?
I provided a proposal to Pura, yes.
Okay. Was the proposal provided in response to an RFP?
Again, I'm going to object to relevance.
You know, Attorney Venora, are these the questions? My recollection is that we sustained an objection with respect to similar interrogatories in this matter. I can pull up the motion ruling if that would help, or if you'd like to distinguish the questions that you have now.
Sure. As I recall the motion ruling, I think it characterized those questions as potentially cross-examination questions. And so, or de facto cross-examination. So I think we're trying to understand just the parameters of his engagement and how the testimony he's submitting here square with the parameters of his engagement.
Okay, I don't think that was the full extent of that motion ruling, but I'm happy to pull it up and consult. Do either of you recall the motion ruling?
We do.
76.
Motion ruling now on, yeah, motion 76.
Is it possible that 76 was with respect to the company's union?
Yes, these were questions that were in the union set of interrogatories.
Okay, Attorney Venora, I'm not. I'm not sure that your statement about that ruling is a complete recitation of what that ruling in fact says. I'm happy to read it into the record, but what I'm reading from that ruling is that we do reference cross-examination in there, but find that you're attempting to conduct cross-examination of a party where they have not put up a witness to that fact. You know what? I'm not gonna do this from the bench here. I can step out and refresh my recollection about the ruling, but
So,
let's
okay,
do that. I can,
just so we have the whole picture, I could just state, we're looking for copies of public documents that we believe go to the credibility of the witness. And so that's, I don't think there's a claim, or there could be a claim that, these are not public, this isn't public information. So we're trying to understand the timing of his retention, and the parameters of the proposal he provided and how they relate to his testimony.
I understand. I don't, I mean, I can step out and read this fully. I think
Sure.
the ruling speaks to the information not being material to the company's rate application, as it does not advance the factual foundation on which the authority's decision will rely. So if we want to take a 5-minute recess, I can review this ruling further and come back and make a ruling as to whether that applies here. But to summarize, the company is seeking the RFP and
Yeah, just to summarize, we're asking a copy of his proposal, a copy of the RFP, and a copy of the signed contract, on the basis that we believe those are all public documents, and that we have a right to review them and to assess, in terms of materiality, I think we have the right to assess them in relation to our case, in relation to potential, further questions of Mr. Rothschild. So that's, we would, that's our request.
okay, thank you. We can take a 5-minute recess. Okay, we can go back on the record. Attorney Venora, I'm going to sustain the objection and rely on the authority's ruling to motion number 76. So I'll ask that we move on from these questions.
Okay, I just want to note we maintain our objection for the record to that ruling.
Okay.
And lastly, Mr. Rothschild, do you possess any information on the organizational structure of EOE or the internal protocols in place with respect to the interactions between EOE staff and Pura?
I'm going to object to the relevance of that question again, but
Okay, I am going, is this motion number 73 this time? Is,
Well, I think it's related to the same ruling, but my question those were questions to EOE. This is a question just to Mr. Rothschild, whether he possesses any such information.
that's fine. I'll let Mr. Rothschild answer that.
okay, the objection has been withdrawn, Mr. Rothschild.
I've signed contracts and I don't recall right now what I have regarding that material. I've read material, I signed contracts. I don't know right now if I have that information or not.
Okay. Would you be able to review your records and provide that as a late filed exhibit?
I'm going to object to a late file exhibit.
The late file exhibit request is pertaining to the organizational structure of EOE.
I asked him if he has any in his possession, any information on the organizational structure of EOE or the internal protocols in place with respect to the interactions between EOE staff and Pura that was referenced in the motion ruling.
And that is what you're objecting to, Attorney Lopez.
Correct. I still don't really see how that's relevant.
Okay, let me just make sure I get the motion ruling reference correct. I believe it is motion ruling 76 still. I will sustain the objection on the basis of the authority's ruling to motion number 76.
Okay. And we just maintain our objection for the record. And lastly, Mr. Rothschild, do you possess copies of any communications between EOE staff and Pura in relation to the companies or this docket?
Again, I'm going to object to relevance. That being said, this whole line of questioning is fascinating, particularly because I think Mr. Venora knows, and I think everyone knows at this point that the ex parte rules apply to EOE staff and authority decisional staff. So I'm not sure what he's driving at with Mr. Rothschild specifically, but again, I'm not sure how this applies to CNG's rate case proceeding, so I'm going to object to the relevance of that. Thanks.
Okay, was that specifically addressed? I'm sorry, one moment. Okay, I do see internal office communications was referenced in our motion ruling, so I will sustain the objection on. Well, you're asking, oh, hold on. I will sustain the objection on the basis of the rulings to both motion ruling 73 and 76.
We'll just note our objection for the record, and that's all we have. Thank you,
Okay.
Mr. Rothschild.
Thank you.
Thank you, counsel.
Thank you, Attorney Venora.
Thank you.
Let's see. Authority staff. Attorney Wright. Let's see. Attorney Anaouiji. Commissioner Karen. I also have no questions. Attorney Lopez, would you like a moment to consider redirect?
Yes, if you wouldn't mind, Madam Chair. If
Okay.
you could have 5 minutes. Or
You know what? Let's take our lunch break. We will resume at 12:45 and we will do the redirect of this panel before moving into the SCG cost of capital panel.
okay, thank you.
Okay. Oh. I forgot my drink. I have to have Robin bring me my drink. No. Yeah, I'm just text Robin. It's fine. Sorry, one moment. I knew I felt extra light. Okay, thank you. Welcome back to docket number 23-1102. Attorney Lopez, any redirect?
Yes, Madam Chair, do have a few redirect
Okay, Attorney Lopez.
for Mr. Rothschild. Mr. Rothschild, do you recall the conversation you had with Attorney Venora in his cross-examination related to the options contracts for gas and electric utilities?
Yes.
Okay. And do you recall that you were talking about your experience that indicated that electric utility options are similar to gas utility options, and that such comparison or use of both is valid usage, since they are and the gas utilities here are for a longer, or excuse me, the electric utility options are for a longer period of time?
Yes, from my experience, we calculate the cost of equity weekly over a number of years for electric, water, and gas utilities, and they are not always the same. Some go up or down in different ways, but they're certainly, I would say, similar animals from my experience of calculating these over many years using options, that they're in a similar category of risk. Yes.
Okay. Thank you. And I did also want to ask the use of these options for both gas and electric options. What is the overall impact on these to your analysis?
Doesn't impact my analysis at all. It's just to help understand in general what the cost of equity in terms of what capital markets are indicating. I don't want to say it doesn't impact me at all. It's certainly something I review, but it's not an input to any of my models. So when you look at my model ranges and everything, and in terms of my recommendation, it's not it doesn't impact my model results at all.
So just to be clear, it doesn't impact your model results for cost of equity?
No.
Those are all the questions I have. Thank you.
Thank you. Thank you, Mr. Rothschild. You are excused for now. And we will call up the company's, the SCG's cost of capital panel and authority staff are up first for cross-examination. Okay, Attorney Vaughn, when you're ready, if you could confirm whether you have any new witnesses.
Good afternoon, Chair Gillette. No new witnesses.
Thank you. Then I'll remind the witnesses they remain under oath and turn it back to you, Attorney Vaughn, for any preliminary matters.
Yes, thank you. Ms. Bulkley and Mr. Panici, do you recall answering a series of questions I asked you at the start of your testimony for CNG on the topic of cost of capital?
Yes, I do.
Yes. Do you also recall answering questions on cross-examination from Pura staff during that portion of the hearing?
Yes.
In appearing for SCG now and for the purposes of administrative efficiency, do you adopt your testimony from the CNG transcript and stipulate that if asked those same questions again, your answers would be the same? I'll begin with Mr. Panici.
Yes.
And Ms. Bulkley.
My answers would be generally the same, although I think there are a couple of clarifications that are important from that testimony. In particular, in the discussion that I had with Mr. Novella regarding the under or over performance, the hypothetical scenarios that we spent some time on yesterday, under and over performance in the market and the effect of that on the cost of equity. I think as we were having that discussion, I had mentioned that I had some data that I had prepared that I had updated for the purposes of this discussion, and wanted to clarify that while we spoke a lot in hypotheticals yesterday about underperformance and overperformance, the issue there is really with respect to what happens to price in that circumstance. And if you look at that performance over time, from the time that we filed our testimony, my testimony in the beginning of this proceeding, using the data that I relied on in July 2023 to the present, you would find the underperformance, meaning that the gas utility proxy group had declined in price terms from the time that we filed our my direct testimony. And so I think that's an important factor, whether you want to think about that in terms of overperformance or underperformance relative to the S&P. That is actually what's used in the DCF, and that is actually what affects the dividend yields. So I think that's an important point to clarify there. My second clarification is with respect to, you asked me a question about what data Pura should be using. And I focused my response on the most up-to-date information that is likely to come, but neglected to mention that there are volumes of information that have been provided thus far estimating the cost of equity. There are at least 2 or 3 sets of calculations prepared in my direct and rebuttal testimony that should also be considered as part of this, the Pura's decisions. With that, I would adopt my testimony.
Thank you. The panel is available for cross-examination.
Thank you. Mr. Novella, please.
Thank you, Madam Chair. Good afternoon, everyone. Good afternoon, panel. Hello, nice to see you again. Just so you're aware, I will be citing, for the most part, most of the same questions that we spoke about yesterday. So we'll go over the proxy group. Your original proxy group contained 5 gas distribution companies.
That's correct.
And when establishing your proxy group, it's important to assure that the proxy group is of comparable risk to the company you are asked to model a cost of equity estimate for.
That's correct.
And how did you establish the risk parameters for your comparable group?
As I mentioned yesterday, through a series of screening criteria that were intended to, I started with the universe of natural gas companies covered by Value Line and narrowed that group using a series of screening criteria, including credit ratings, paying dividends, percentage of the company that is in gas operations. And there are a couple of other screens, but they're in my direct testimony.
Okay, thank you. And do you use the assigned credit ratings of the credit rating agencies as a proxy for risk as well?
As we discussed yesterday, that is part of the screening criteria. I would say that that is not entirely reflecting the risk associated with equity. The credit rating agencies are focused on the debt side and the ability to repay debt. They are not focused on the risks to equity specifically. And I think I pointed out yesterday that I have conducted a separate business risk analysis in my direct testimony specific to those 5 proxy companies that manages that.
Okay, thank you. And in your rebuttal testimony, you expanded the proxy group to add CHK, NJR, and Southwest SWX.
No, I did not do that. So as we talked about yesterday, I maintained my same proxy group of 5 companies. And I also provided a proxy group that was has historically been Dr. Woolridge's proxy group that he has relied on for gas companies here in Connecticut in many cases and across the country, as a demonstration that that group was, that has been his standard group, and it was maybe not necessary to be using the combination utilities as a proxy for the gas companies. Over time, that has been a sufficient group for Dr. Woolridge to do his analysis on in the past, and there are no meaningful changes in that group. I also ran the cost of equity models and demonstrated that the results associated with that proxy group were very similar to my group and did not make any changes to my group.
Okay, and those 3 companies, the aforementioned companies, CHK, NJR, and SWX, did they have similar risk characteristics, regulated revenues, credit ratings, coverage by analysts, and other characteristics as the other members of your original proxy group?
No, they did not meet all of the screening criteria for my original proxy group, which is why they were excluded. I believe in response to a data request, we did provide you with all of the screening criteria and how each of the companies either met or did not meet the screens that I relied on.
And that's why you didn't include them in the original analysis, correct?
That is correct.
Okay. And you are not comfortable or comfortable including these names for the authority to consider in its own cost of equity model analysis?
As I said yesterday, I think my group is more comparable, so I would still support my proxy group as opposed to the broader proxy group because it is more comparable to the company.
Okay. We're going to go to the utility stock performance, and I know you've given some clarification, but these will be very similar questions that were asked to you yesterday. And you indicate several times in your testimony that the utility stocks will underperform going forward or are underperforming the current market.
And I don't recall, as you read that question, I don't recall that it specifically says that I referred to it several times in my testimony. I know there is a specific reference in my testimony to an equity analyst's view on underperformance. I would not say that I specifically myself have characterized them as underperforming, but an equity analyst, and I believe yesterday you provided a reference to a specific article. Generally, I think you didn't have the page number, but you provided an article. So I think there is a reference to underperformance in my direct testimony.
Okay. Thank you. And do these utility stocks, do they traditionally underperform, outperform, or trade in line with the market?
I don't think we can say one necessarily. I can't say that there's a standard for that.
Okay.
Sometimes they outperform and sometimes they underperform.
Okay. And okay, during the last periods of ultra low interest rates, did the utility stocks outperform the S&P? And you asked me for a time period yesterday, so say from 2010 to 2015.
Yeah, and I'm going to say I don't have that analysis, same as the answer that I gave you yesterday. And the reason is, as I said yesterday, that if you're thinking of performance charts, they typically start with a date and then you calculate your performance from there. And I have not, even though you've given me a date just now, I don't have the ability in my mind to run that calculation for you.
Okay. And can a stock price stay flat and still underperform the overall market?
Yes, theoretically, that is true.
Okay. And can a stock price increase and still underperform the market?
Theoretically, that is true. Yes.
And can a stock's price decrease and still outperform the market?
Theoretically, that is true.
Okay. So again, the underperformance, outperformance, you would agree, I believe you would agree that it's a relative term that is specific to a stock's performance and is gauged relative to the performance of the overall market and does not necessarily indicate increase or decrease of the stock price.
Yes, that is correct. Yes, I agree with that statement, but I do also believe that the article that we were talking about that you did not have the page for at the time, in going back and reviewing my testimony, I believe the article actually further went on to say that there was an expectation that utility stock prices would decline as interest rates increased. And so there was some more than just underperformance referenced in that article. So I think that's an important clarification that I probably should have brought up at the beginning as well.
Okay. And as it relates specifically to your DCF model, if a stock underperforms and the price remains flat for over a period of several months, and if we hold all else equal, growth in dividends and yields, what effect does that have on your DCF output?
Yeah, I think we talked about these terms yesterday. So flat and constant used in that sentence are equivalent in my mind. And so if none of the variables in the DCF change, the answer obviously cannot change.
Okay. And in your cost of equity analysis, you conclude that both long-term and short-term interest rates have increased in the past year, correct?
That's correct. I think I offered that at the time I filed my direct testimony. Interest rates were at 3.92%, rebuttal was at 4.19, and as of the end of last week was 4.78. And I think Dr. Woolridge confirmed that same general trend in his testimony earlier today with, I think he's using 4.75 in some recent analysis that he testified to earlier today. So.
Okay. And you're, so with that interest rate move, you're still claiming that the stocks, your data indicates that those stock prices have gone lower as interest rates have gone higher.
That's correct. We looked up yesterday in more recent models than what were used in my rebuttal testimony, and I confirmed for you that the majority of those stock prices had declined since my rebuttal testimony.
Okay. Would you consider XLU a good proxy for the utility group?
The XLU is, so this is a gas group, so it's a little bit different. And I would say the XLU may not be appropriate necessarily for the gas group because I don't think there are that many gas companies in that index. I believe I've looked at this in the past and there might be 2 gas companies out of 30 companies in the XLU. So I don't think that that's actually a representative index for the gas companies.
Okay, but when you're suggesting that utility prices will when you're suggesting that utility prices will remain under pressure or go lower, you don't feel that the XLU would be a good proxy for that conversation for utility prices?
Well, what we're doing here is estimating the cost of equity for 2 gas companies, right? And so when we talk about where prices are headed, we really care about where prices are headed for the gas companies, right? That's why we're using a gas proxy group. That's why I think everybody in this case has considered a gas proxy group as being one of the more comparable groups. And so I think, the XLU is a broad measure of the utility industry, but I believe that the number of gas companies in that index are very small relative to the overall index. So just as in the conversation that Mr. Venora had with Mr. Rothschild earlier today, I don't believe that it's, that the use of options data for electric companies doesn't necessarily correspond to gas companies. I don't think that the XLU that is more heavily weighted towards electric companies should be used for gas companies.
And do you feel that the XLU and the gas companies don't trade in line typically, or they trade distinctly separate?
I haven't done that analysis, but I do think that it would be more appropriate to use a gas index, which is what I was using in the performance analysis that I described earlier to you, that I relied on the proxy group companies that I have used in my analysis and created a composite index of how those particular companies are trading relative to the S&P 500. And
Are you-
that's the analysis that I described earlier this afternoon.
Okay, and are you aware of, is there a gas ETF or some kind of proxy that we can track?
I am not aware of one. No, it's pretty straightforward to build, the index in the S&P database. So I relied on the S&P platform and built a price index. It's pretty straightforward. They market cap weighted for you.
Okay. You cited a study indicating the high correlation to interest rates and utility prices, correct?
I'm sorry,
You cited a study indicating a high correlation to interest rates and utility prices. I believe it was the Goldman Deutsche Bank study.
Yeah, you didn't have a page for that yesterday. Do you happen to have the page for that today? I think it would be helpful, given that I feel like I did miss an important piece of information to share with you on the other reference. Do you have a page number for that study?
I think it's page 21.
Page 21.
If you give us a moment, maybe we can find one. I can go on with the question, then we can get you the page number. I'm pretty certain that it's there.
Mike just found it. I just want to read it really quickly.
Okay.
Yep. Okay. I'm there.
And I believe I asked you, does that relationship hold in perpetuity? In other words, as interest rates continue higher, will the utility stocks continue to fall?
Yeah, what I will say is that the Goldman and Deutsche Bank analysis found that utilities had one of the strongest negative relationships with bond yields. I cannot say that they examined whether it would go to zero, which was your question yesterday. I don't have that information. Their study indicates, having looked at 5 years of historical data, that this particular industry had the strongest negative relationship with bond yields.
Okay, that brings me to my next question. And do you feel that there would be an inflection point where fundamental drivers of stock valuation, for example, property, plant, equipment sales, et cetera, would be the determining factor in the valuation of a stock? And it might dislocate from its relationship with interest rates?
I don't recall that question from yesterday, which is fine, but can you just give it to me again, because I missed it?
Okay, is there an inflection point where the fundamental drivers of the stock's valuation or its price ultimately, for example, property, plant, equipment sales, would be the determining factor in the valuation of that stock and dislocate from whether interest rates are higher or lower?
I'm not sure I can say for certain. All I can say is that historically they have been highly negatively correlated.
Okay, so then they can go to zero if there's no valuation where somebody would step in to buy the inequity, then presumably if interest rates go high enough, you're suggesting they might go to zero?
No, I'm not suggesting that at all. That was your suggestion yesterday and again today. I think I said yesterday in response to that particular question about zero, that that's very hypothetical, and I have never seen any market data that would support that.
Okay. Let's move on to the yield spread analysis that you did on page 23 and 25.
Yes.
Thank you. Could you briefly describe the analysis? I'm aware you did it yesterday, but for the record, please.
Yes, so it is the difference between, the S&P Utilities Index and the dividend yield of the S&P Utilities Index, I should say, and the 10-year Treasury bond yield.
Okay. And the negative reading indicates that the yield on the 10-year Treasury is higher than S&P Utilities right now.
That's correct.
What index are you using for that S&P Utility Index?
It would be the S&P Utilities Index, the SPU, I believe is the ticker for that.
SPU. And how many gas companies are in the SPU?
I don't know that off the top of my head.
Would it be comparable to maybe the XLU in a certain degree?
I don't know.
They're both S&P products. I would think that they're
I
probably.
can't answer the question. I don't know the answer to that.
Okay. But we're in agreement, they both end in utility index, whether it be the XLU or the S&P utility index.
They're both labeled utility index, yes.
Right. And you say traditionally the yield on utility stocks is typically a certain amount higher than the 10-year yield. And as your analysis demonstrates, that yield held up until approximately mid-2022, and then it dislocated.
That's correct.
Okay. And your conclusion is that a negative yield spread is an outlier, and the analysts do not expect that yield to hold.
That's correct.
And it's a two-variable analysis.
Yes.
Okay. And movement in either variable will affect the direction of the spread.
I think it depends on the magnitude of the movement of the variables, but yes.
Okay. And these analysts probably expect this to regress to the mean because this is I believe you said it was like a 2.5 standard deviation outlier. So
2, yeah.
okay. And so we would, for that regress to the mean, we would have to either see a decrease in the stock price and or an increase in, a decrease in the stock price and or decrease in the yield.
Well, it's the S&P Utilities Index dividend yield.
Okay.
So it would either be a change in the dividend yield on the utilities index, or which could be either the dividend or the price, I suppose.
Okay.
Right, it's dividend yield. And then the 10-year treasury bond, right? So a change in any of those variables.
Okay. And at the end, though, you conclude because of this inverse relationship that interest rates and because interest rates and utility prices are inverse, you conclude that utility stock prices will continue to decline and outperform the overall market in that analysis.
I
read it
think,
correctly?
I think it says if the prices of utility stocks decline. Is that where you are?
Yes.
Maybe you can point me to where in my testimony you're reading.
I don't have the exact line.
Okay. The line that I'm referring to is on page 25, on page 5, and it says, if interest rates remain relatively high as expected, then share prices of utilities would be expected to decline. It doesn't say continue to decline. It just says decline. So it doesn't say free fall. It says decline.
Okay. No, it's okay. Thank you. We touched upon the Federal Reserve a little bit, and I know that we've been talking about it at length here, so I'll just ask a couple of the brief questions. If this were later, we'd probably have more information. I know that today and tomorrow we're meeting, so we could keep going with this conversation. But on page 20 of your pre-filed testimony, you said the expectation for higher for longer and long-term rates. And the blue chip financial forecast was for 3.8 in Q1 of 2025. And you mentioned what the 10-year bond is currently at, roughly 4.7, correct?
You said you were on page 20 of my direct testimony?
Yes.
So on 20 of my direct testimony, I did talk about the blue chip consensus estimate of 3.8%, which I believe in my rebuttal testimony is now higher than that number considerably. I don't see the other number that you're referring to, though. I only see one estimate here. So what's the other value?
Well, this is more of a review. So you cite the participants do not view it as likely to be appropriate to raise rates further. They do not want to take that option off the table. You mentioned something like that yesterday. The federal funds rate, there's no current projection for a raise or a hike, but that option is not off the table. But currently, all Fed projections are for a cut at some point, albeit fewer this year than we expected when we entered the year.
So I think the conversation that we had about the Fed was that at the end of last year, there was an expectation for 3 cuts, but based on market conditions and the strength of the economy, and I think Dr. Woolridge spoke to that and confirmed that same outlook for market conditions, generally speaking, earlier today, with, I think he referred to it as sticky inflation, that the Federal Reserve has not been in the position to decrease interest rates. So the December expectation of 3 rate cuts is pretty much off the table at this particular point in time. And if you were to look at, I think we talked about the CME group probability distribution for rate decreases. And that particular index or that particular measure has been estimating fewer cuts, maybe 1 at most this year, later in the year, but no, not a very high probability of that.
Okay. And that CME probability index, does it have a probability for a rate hike at all?
It does not. And I think Dr. Woolridge mentioned that they don't tell you that. I think that was his testimony earlier today.
No, but that probability index, you know how they assign like a certain percentage of what they would think, there's no, is there, they haven't, can we assume that if they don't have that probability, it's 0?
Don't think it's a probability of 0. No. It's just not, they're focused right now on where the rates would be. To look at the index actually and see. I'm trying to visualize the chart. Just trying to pull one up to see if I have it. I mean, I think I said to you yesterday, as I was preparing to testify, I was reading an article that suggested that the Federal Reserve would need to be a little bit more hawkish and that the interest rate increases were not off the table. But I don't know if the CME group, what their projections are at the moment.
Okay.
I don't have it. Sorry.
That's quite all right. That's all I have. Thank you.
Thank you. Office of Consumer Counsel, please.
Probably don't even need to sit down because this will be very fast. Hi, Tom Wheel from the Office of Consumer Counsel. I'm just going to ask again because I didn't actually hear Attorney Vaughn include us in the stipulation, but so I'll just start fresh. This is a question for Mr. Panici. Avangrid released first quarter financial results on April 23rd, 2024. Is that correct?
Yes,
And there was not an earnings call associated with that release?
that's correct.
Could the company provide as a late file exhibit the consolidated income statement and release associated with those first quarter results?
Yes, we will do that.
That's late file exhibit 105.
Thank you. That's our only question.
Thank you. Attorney Anaouiji. Attorney Wright. Thank you. EOE. Thank you. Commissioner Karen.
Yeah, just one quick question. You're talking about the interest rates, they go up, the expectation is the stock price will go down. If the rates are stabilized, will we expect the share prices to be stable as well? Or would you expect fluctuations one way or the other, all things being equal?
Yeah, I would say that, there's some moderate fluctuation that occurs on a day-to-day basis in the market, but I would suggest that they would be more stable if interest rates stay where they are.
But a fluctuation would be like a narrow range, whereas if interest rates were moving one way or the other, it'd be a larger range.
Yes, that's what
Okay.
I would expect. If you were to look at this data, so my direct testimony, I relied on data in July. And if you were to look at data in September through November last year, as we saw interest rates increasing, the utility stock prices decreased very significantly over that time period. And then things leveled out and so did prices, right?
Okay.
So I think you would see that happen.
Thank you.
I don't have any questions either. Attorney Venora, do you need a moment to consider redirect?
Yes, just one moment if we could have to check on redirect.
Okay. Attorney Venora?
We conferred and we have no redirect.
Okay, thank you.
Thank you.
Then this panel is excused. Thank you. We'll call up the Office of Consumer Counsel's Cost of Capital panel for SCG, please.
I have it on my computer.
No, your name tag.
Oh, I have it right here. I brought it with me.
Yeah.
Almost.
Welcome back, Dr. Woolridge. I'll remind you that you remain under oath. Attorney Talbot Slagle, any preliminary matters?
Just a couple questions to ask Dr. Woolridge.
Yeah, oh, sorry.
No problem. Dr. Woolridge, did you file initial testimony on February 8th, 2024, rebuttal testimony on March 13th, 2024, and various interrogatory responses pertaining to the Southern Connecticut Gas Company in this proceeding?
Yes,
Do you have any corrections or amendments to any of those filings?
no,
Do you adopt those filings as your sworn testimony in this proceeding?
yeah,
Do you recall testifying earlier this morning and responding to cross-examination from authority staff as well as counsel for the Connecticut Natural Gas Company?
yes,
As you appear this afternoon to respond to cross-examination as to your testimonies and discovery responses pertaining to SCG, do you adopt your in-person testimony from this morning and stipulate that if asked the same questions again, your answers would be the same with the exception of any numerical figures such as dollars or personnel headcount that differ between the two companies?
yes.
Thank you. He's ready for cross-examination.
Thank you. I apologize. I neglected to call up the company, but, oh, wait. Yes, the company is up first. Thank you.
Yeah, we have no further cross for Dr. Woolridge.
Thank you. Authority staff.
Good afternoon.
You mentioned you've been doing this for a long time. Have you had to do it twice in a row exactly the same way? This might be something new?
Yeah.
Okay, good. So you're aware these are going to be the same exact questions?
I believe so.
Okay. And so should the average value line for beta for all stocks in the value line be universe be 1?
No, we found that the average is 1.1.
Okay, and so that's not currently the case. And have you seen an increase in the beta coefficients for the utility space in the last several years?
Sorry.
An increase in the beta coefficients for the utility space in the last couple of years? And is that a function of how it's measured, or is there increased risk in these names?
Oh, no, but it may be a function, but I haven't studied it, so I can't give you a definitive answer, but I would say yes.
Okay. And if the utility betas have increased, would that mean that other sectors' betas have increased as well?
Yeah, invariably they go up and down over time.
Okay. And proxy group, do you consider the number of companies an important factor determining your proxy group?
Yeah, I think, as I said, I 8 to 10.
Okay. Is there a minimum amount of companies?
8 to 10.
8 to 10. And why do you find it important to have a larger proxy group as opposed to a smaller one?
It's because when we're using the proxy group and we don't use a proxy group of 1 because there's a lot of variability in individual results for, say, dividend yields and growth rates in the DCF or, risk-free, betas and market risk premiums. But so you use a proxy group. So these things average out over time so that you're trying to get a good measure of what in this case, the cost of equity, in other cases, trying to see the value of the stock by using a proxy group. Mainly because there's a lot of random variation that averages out.
Okay, great, thank you. And how did you determine the relative risk of one company to the other and the companies such as SCG and CNG?
In my testimony, I use credit ratings.
Okay. And if the risk-free rate moves higher, does it stand to reason ROEs must move higher with it?
Sometimes it does, sometimes it doesn't, but my testimony, I have a study that showed that, between 2000, 2001, 2020, 2021, interest rates went down, ROEs pretty much stayed. They went down, hit historic lows, but they didn't go down nearly as much as interest rates. So that in 2022 and 2023, as interest rates have gone up, ROEs have gone up, but much less so.
Okay, is that the Warner Jarvis?
No, that's a
That's a
different
different
study already.
Okay. Growth rates, do growth rates change consistently throughout the year, or is there a pattern as to when growth rate numbers are updated by analysts?
No, well, companies announce their earnings quarterly, and usually analysts review these, and if there's a need to adjust their forecast for next quarter or the following quarter or their long-term forecast, they do that after an earnings call.
Okay. And the growth rates in your proxy group, have they changed since you filed your testimony?
No.
And you rely primarily on the DCF model in your cost of equity
Yes.
recommendations? And you utilize both dividends per share and book value per share growth rates as inputs in your growth estimate in your DCF model?
Yes.
Okay. And in this case, has the company utilized I'm sorry, never mind. And are DPS book value per share growth rates typically higher, lower, or the same as the EPS growth rates?
In the study I've done, they're a little lower over the long term. They're a little lower than earnings per share growth.
Okay. And why do you think it's important to incorporate growth estimates for DPS and book value per share in the DCF model?
Well, because the DCF model is the cash flows are dividends, and so it's important to capture the dividends because that's what you're actually getting as investor.
Okay. And just some little more on dividend yields. Since you filed, have the dividend yields changed?
They haven't changed. I don't know what happened yesterday, the day before, but they have not changed that much. I mean, I filed my testimony in February, then nothing really changed from then to where I did my SIR rebuttal, and I haven't seen a significant change, no.
Okay. And when we say the investor's required return, I'm sorry, would you agree that the ROE tends to measure the investor's required return on an equity investment?
That's, yes.
Okay. And when we say the investor's required return, the time frame we're specifying?
Long term.
Long term being 10 years, you said?
I'd say 10 years.
5, 10, okay. And have you, again, sorry to say the same thing here, but have there been any changes to the Federal Reserve's guidance as it relates to interest rates or macroeconomic changes since the rate case application in early November? And would that have an effect on your COE estimate?
I don't, I mean, we've kind of gone through these series of situations where we're come up on a Fed meeting. There's an earnings number, inflation number that indicates the economy's still pretty heated, and so, or it's growing. And so the Fed has kind of put off any rate cuts, wait until inflation comes down.
Okay.
And the economy has to slow down a little bit. I mean, there's all sorts of expectations, but we'll see what happens.
Okay. And you kind of gave the next question was, were the capital expectations for the Fed run rate, Fed funds rate, and long-term inflation expectations?
Now, I think, the Fed, if we see a slowdown in the economy, they'll start cutting rates.
Okay. And you heard some of the discussion we had with Ms. Buckley on the inverse relationship between interest rates and utility stock prices.
Yes.
So interestingly enough, in the last 15 years, we've had almost zero interest rates. Did utility stock prices continue to go higher as
Yeah, and I agree with her comments and observations. Yeah, higher rates are bad for utility stocks. Lower rates are good for utility stocks.
Correct.
Yes.
But what I'm trying to ascertain is there an inflection point? We saw rates go to zero. utility stocks didn't continue to go to the moon. Now rates are presumably higher. Is there an inflection point where investors say, utility stocks aren't going to go any lower, even though interest rates may continue to trend higher?
No, I mean, one of the great mistakes you make is you say a stock can't go any lower, because it usually will. So anyhow, I mean, no, generally interest rates go up. It's not good for utility stocks. Interest rates go down, utility stocks go up.
Okay, thank you. That's all I have.
Thank you. Attorney Anaweji. Attorney Wright. Thank you. Attorney Lopez. I have no questions. Would the OCC like a moment to consider redirect?
We have no redirect, Chairman.
Thank you. Dr. Woolridge, you're excused.
Thank you.
Thank you. We will recall Mr. Rothschild for the cost of capital panel, and the OCC is up first for cross. Okay, I will remind Mr. Rothschild he remains under oath. Attorney Lopez.
Yes, thank you. All right, Mr. Rothschild, I'm going to ask you some questions again just to get us started. They're mostly going to sound similar from what you were asked this morning. So as part of your work in this docket, you provided pre-filed testimony, surrebuttal testimony, and interrogatory responses, correct?
Sure.
And do you have any additions or corrections to your testimony or interrogatory responses?
I do not.
And in this hearing for SCG, do you adopt all of those items as part of your sworn testimony in this proceeding?
I do.
And then in appearing now for the SCG rate case for purposes of administrative efficiency, do you adopt your testimony from the CNG transcript and stipulate that if asked the same questions again, your answers would be the same?
Yes.
All right. Thank you. Mr. Rothschild is available for cross-examination.
Thank you. Attorney Wheel.
Thank you. I think with that stipulation, I might only have potentially one question, Mr. Rothschild, which is, maybe two. Do you recall our conversation during the CNG panel?
Yes.
Is there anything in the responses you provided to those questions with respect to CNG that stands out in your mind as being applicable in a different way or inapplicable to SCG?
No, nothing I can think of. No.
Okay, so at the risk of repeating, I think Attorney Lopez's last question, your testimony in response to my questions from earlier this morning as to CNG would be exactly the same if I asked you every question that I asked you this morning, but with respect to SCG?
Yes.
Thank you. With that, we have no further questions.
Thank you. Attorney Venora.
Thank you. This will be very brief. I am going to simply ask the same question that Attorney Wheel asked you. So if I were to ask you the same questions that I asked you previously during the CNG CNG session, would your answers to those questions be the same?
Yes.
Okay, thank you. That's all we have.
Thank you.
Thank you. Attorney Anaweji. Oh, wait, I'm sorry. Authority staff. Attorney Anaweji, Attorney Wright. Thank you. Commissioner Karen.
No questions.
I have no questions either. Do you need a moment to consider redirect?
I do not. Thank you.
All right, Mr. Rothschild, you're excused. Thank you very much.
Thank you.
Okay, we are going to transition into clean energy innovations. I'll ask the CNG panel to approach. I believe authority staff are up first for this panel. It's not on both sides. Yeah. Okay, it's actually don't think the authority staff have questions on further reflection. So Attorney Law and Attorney Crane, I believe you're up next. Oh, but you can approach, I'm sorry, you can approach while I do the administrative matters. So feel free. Attorney Vaughn, if you could introduce your new witnesses.
Absolutely. We have Ms. Lainey Brown and Mr. Barry Catchmark. The other panel members, Mr. Langland and Mr. Romero, remain sworn, but I'll ask the new panel members to please introduce themselves with their titles, please.
Lainey Brown, Vice President of Sustainability.
Barry Catchmark, Senior Manager, Gas Engineering.
Okay. If the new witnesses could please raise your right hand. Sorry, Attorney Vidor, did you want to swear in your other witnesses too? Or?
Consistent with our previous approach, we're swearing in our main panel with the addition of Ms. Brown because we
Okay.
she may face some questions, and then if needed, we will bring up Mr. Burgess and swear him in.
Fair enough. Thank you. Apologies. Raise your right hand. I swear to tell the truth, the whole truth, and nothing but the truth under pains and penalties of perjury.
Yes.
Thank you. Attorney Vaughn.
Thank you. Mr. Langland and Mr. Romero, just for the record, you remain sworn. Mr. Catchmark, as part of your preparation for this docket, did you provide pre-filed direct and rebuttal testimony and exhibits which were marked as exhibits CNG-CEIP 1 through 9, exhibits SCG-CEIP 1 through 9, and exhibit CNG-SCG-CEIP rebuttal 1?
Yes.
And did you also sponsor responses to interrogatories submitted in this proceeding?
Yes.
Do you have any updates or corrections to your pre-filed testimonies or interrogatory responses not previously identified for the record in an interrogatory response?
No.
And do you adopt your pre-filed testimonies and interrogatory responses as part of your sworn testimony in this proceeding?
Yes.
Ms. Brown, did you also sponsor responses to interrogatories submitted in this proceeding?
Yes.
Do you have any updates or corrections to your interrogatory responses not previously identified for the record in an interrogatory response?
No.
And do you adopt your interrogatory responses as part of your sworn testimony in this proceeding?
I do.
And lastly, to the panel, for the purposes of admission into the record, have you reviewed and do you adopt the interrogatory responses submitted by the other individuals identified in the revised hearing agenda for the Clean Energy Innovations Panel?
Yes. Yes.
Yes. Thank you. The panel is available for cross-examination.
Thank you. We will begin with Attorney Lawn and Attorney Crane, please.
Good afternoon. I'm Sarah Crame, appearing on behalf of Sierra Club. So on page 6 of your direct testimony, in lines 3 to 7, you state that the company is not aware that the authority has initiated any dockets or other proceedings to investigate methods for Connecticut's natural gas distribution companies to decarbonize and move towards cleaner energy sources, such as innovation in natural gas supply. Therefore, as part of its rate application, the company is bringing forward its proposals in this docket for PURA's consideration. So the company plans to fund 1.5 full-time employees for a clean energy gas supply team. Is that correct?
I believe it's for the gas energy supply team. It's 3 FTEs, 1 program manager split 50-50, 1 analyst for CNG, 1 analyst for SCG in total.
Understood. Thanks. And that team will focus on renewable natural gas, hydrogen, geothermal installations, RNG and hydrogen blending, and carbon capture and sequestration. Is that correct?
That's correct.
So you've testified throughout this proceeding that the company will not pursue a transition related to the state's climate goals absent a statewide framework. Is that correct?
That's correct.
And given the company's emphasis on a statewide framework and the fact that there is not yet one in place, how did the company select those strategies, renewable natural gas, hydrogen, carbon capture and sequestration, geothermal, for the focus of the clean energy gas supply team?
Those are the trends that we're seeing, in the industry that's being studied out at Gas Technology Institute in Chicago, what we're seeing from our peers that are getting into the space to green up the gas supply.
And then the company is also proposing 2 pilot programs related to clean energy innovation, the Purge Gas Recapture Pilot and the Advanced Mobile Leak Detection Pilot. Is that correct?
It is.
So on page 2 of the panel's rebuttal testimony at lines 6 to 7, you state that the company's clean energy proposals.
Can you just let me
Sorry, yeah.
get to that, please?
Go ahead. Page 2 of the panel's rebuttal testimony, lines 6 to 7.
We're there.
So you state that the company's clean energy proposals are important initiatives at a reasonable scale and cost within the context of this rate case. And sorry to jump back. In your testimony at page 9, in the direct testimony, at page 9, line 2, you state that the proposed cost for the Purge Gas Recapture Pilot is $325,000. Is that correct?
That is.
And that covers the purchase of 1 recapture unit and some necessary ancillary equipment?
Correct.
On page 8, lines 10 to 11 of the testimony, you state that the company estimates that it released approximately 17.24 MCF of natural gas during pipe abandonments in 2022, and that the company expects to complete 40% of all pipeline abandonments annually using this technology, which would lower the amount of natural gas emissions by approximately 6.9 MCF. Does that 6.9 MCF figure mean annual reductions of 6.9 MCF?
That's the initial estimate as based on if we continue down a path of using this equipment and moving from low pressure pipeline abandonments to other pressures or other systems, we could recover more.
So is just to make sure I understand, is the 40% of all pipeline abandonments using this technology resulting in 6.9 MCF?
Yes.
Okay. So in your testimony on page 8, line 17, you state that this volume of gas is relatively small. Is that correct?
Correct.
Can you put that number in context for us? Like how small is relatively small?
I can't. In context of our total throughput, or I'm not quite sure.
I have a suggestion. If we could turn to Mr. Cebulko's pre-filed direct testimony that was submitted as Exhibit BC1 in this proceeding. At page 42.
We're not sure the panel has it. We're going to provide a copy to them.
Okay.
I'm there.
So yeah, if you could look at line 1 on page 42 of that testimony, where it states a single residential gas water heater uses roughly 20 MCF per year, and that's citing Avangrid subsidiary New York State Electric and Gas's initial long-term plan. So based on that context, is it correct that the company's pilot would reduce greenhouse gas emissions by less than the emissions from a single residential water heater?
Could I ask you to maybe ask him first if he is familiar with that or whether he has any comment on the testimony that he just read?
Sure. Did you review Mr. Cebulko's testimony?
I did, and I'm seeing the 20 MCF.
Got it. Thank you. So I'll restate the question. So based on that context, is it correct that the company's pilot would reduce greenhouse gas emissions by less than the emissions from a single residential water heater?
According to this, yes.
And did the company evaluate the costs of potential decarbonization strategies on a per unit of emissions basis before proposing these clean energy pilots?
I'm not quite sure if we looked at it from a per unit against each of the pilots. What we looked at is the potential going forward as well with these pilots, right? As stated earlier, the initial is the 40%. There's capabilities to grow. And as we continue our DIMP programs or changing our retirement plans, abandonment plans, and tie into elevated pressures or higher pressures, we can then recapture larger amounts of methane being at this point just blown to atmosphere.
Is it correct that the technology is useful for mains that are being abandoned?
Correct.
So what did the company do any analysis to scale on, what sort of scaling up is possible after the initial?
No, not after the initial pilot. It's really all dependent on the pilot and the success of the pilot.
Okay.
I think that's technology that we're seeing a lot of our peer companies deploy. And, as if we are to get back on track with our 20-year program, we're going to have more opportunity to use it if the pilot proves successful. And there's also a safety aspect as well of not purging gas into the atmosphere for our employees and the general public.
Understood. Thanks. Okay, so the purge gas recapture pilot would reduce a small amount of emissions from decommissioned pipes. And just to confirm, it doesn't reduce emissions from end uses of methane, correct?
It does not.
And turning now briefly to the advanced mobile leak detection pilot, is it correct that that would not result in any direct emissions reductions?
Not direct. Correct.
Did the company consider proposing any pilots that would reduce end-use emissions of methane or gas demand?
No, just these two pilots. Going back to the advanced leak mobile though, it does have the capability to reduce based on its usage. Again, the pilot states that once we get through a certain portion of our system, we would be able to identify high emitters, which are high emitting leaks. Therefore, targeting those first and repairing those ahead of schedule.
Do those correlate with safety? Like, would the company target those first, or would they target leaks that are important for safety first?
Well, we have our hazardous leaks that we have to work on initially, but our next level would be our class 2s and then our class 3 leaks, and these would fall under the class 3 leaks.
Okay,
High
understood.
emitters.
Okay, just a few more questions relating to network geothermal. So at the beginning of the hearing, Mr. Langland testified that the company is aware of networked geothermal pilot projects being implemented by Avangrid affiliates in New York and Eversource in Massachusetts. Did the company consider proposing a networked geothermal pilot project in the context of this rate case or in other proceedings, such as the Innovative Energy Solutions Program?
No, we did not. We would need a statewide framework similar to what was set up in the state of New York, and we do have an SME here with us from New York who can expand on that if you'd like.
Okay, thanks. If the company were directed to develop a networked geothermal project, could it utilize learnings and resources from Avangrid's New York affiliates and other utilities that have projects underway?
Yes.
Okay, thank you. No further questions from me. Anything you want? Thank you.
Thank you.
Okay, thank you. And I apologize, I skipped over Purist staff due to a misunderstanding. So I do need to backtrack to Purist staff and ask them to do their limited cross, please.
Thank you, Chairman Gillette. Good afternoon, Commissioners. My name is Peter Kramer, Purist staff, and I have a few questions regarding the company's ESG strategy. So first off, in response to, am I coming through clearly? Okay. In response to interrogatory CAE 79, the company explained that Avangrid does not track the emissions of individual operating companies. Can you please explain how Avangrid ensures accuracy and transparency in its emissions reporting without tracking emissions at the operating company level?
Yeah, to maybe expand on that, we collect data across our operating companies as it relates to scopes 1, 2, and 3. We publicly report at an aggregated level. It really depends on the emission source. So if it's at a detailed level, I think I had referenced as an example whether we're looking at leak-prone pipeline replacement, so the emissions reductions relative to in scope 1 as an example, or in some cases, for example, for scope 3 relative to the energy that we procure on behalf of customers. That's information that we collect and have at an operating company level, but what we report publicly is a full, the Avangrid Corporation scopes 1, 2, and 3.
Thank you. Is it accurate then, since you're collecting the data at the operating company level, theoretically, it could be reported publicly at the operating company level, but there's a choice made to report it at the aggregated level.
Yeah, and I think to be clear, some of the things that we report at an operating company level, because we have that specific information, when we look at things like our fleet or our facilities, we tend to aggregate those across the corporation. So those are reported in aggregate. We don't have that. So depending on the source of the emissions and the information we have, we either collect it, aggregate it up from the operating company level or at a corporate level.
Thank you. Similarly, then, does the company have goals for emissions reductions or emissions tracking at the operating company level, or are those goals all held at the Avangrid level?
They're all held at the Avangrid level. And we then we look at and assess and understand the activities that are done across the operating companies that help support emissions reduction, but they're all held at the Avangrid level.
Okay. Then I'm curious if you could elaborate on how it is that the company can monitor, I guess, what's happening at the operating company level and then sort of extrapolate to the achievement of those goals if it's being sort of separated in this way in terms of where the targets are and where the data collection is happening.
Sure. So we set the goals. We engage with all of our internal stakeholders. I work with Al as an example, or our fleet, our general services, to understand the actions they're taking. And they report out on a quarterly basis on those activities. We also report on an annual basis around all the metrics. So as I noted earlier, when we look at and understand, and I'll use the leak-prone pipeline replacement and the relative greenhouse gas related to leaks, we look at that on an annual basis and then compare scopes 1 and 2 elements over time to be able to then, assess our activities and the impacts that has, in this case, specific to greenhouse gas emissions. But it could be fleet, or it could be, we have a number of goals. So depending on the metrics.
Thank you.
Yep.
So in that case, for any of the various ESG metrics, is it accurate to say that the tracking is happening on a quarterly basis at the operating company level, and the reporting is happening on an annual basis at the Avangrid level? And so therefore it's on that annual basis that the company would have a view of progress against goals and the progress that it's making on its general ESG strategy.
Yeah, it's a little bit more nuanced than that,
Okay.
recognizing that not all the information is collected at an operating company level. And I'll give you some examples. So for example, fleet is an example, or our facilities as an example, that's reported to us from our corporate, from general services, where we do have operating company level information. We will then aggregate it up. So it really depends on the metric and the goal and the metrics, relative metrics, and where that may sit within the company itself.
Okay, thank you.
Sorry, and also just to clarify, so we do report our metrics on a quarterly basis. We do not report our greenhouse gas emissions metrics on a quarterly basis because of the amount of work that's required there. It is something that we are looking at on a going forward basis, but today we do not report all of our greenhouse gas emissions across the company quarterly.
And when you say report with respect to greenhouse gas, publicly report internally?
Report internally as part of our goal measurement.
You.
Yeah.
Okay. The company just testified moments ago with cross-examination from the Sierra Club and Conservation Law Foundation that the pilots discussed were not intended or chosen for their emissions reduction achievement. So to help us understand what is happening at the operating company level, can you tell us about some of the specific actions that are being taken with regard to emissions reduction for CNG?
So I think the biggest contributor to there's probably two primary. One is leak-prone pipeline replacement. That's a contribution to our scope 1 and 2 carbon neutrality goal. I also think that if we look at the efficiency programs relative to end use reductions, that is also one. So we don't have a scope 3 goal commitment, but we do report on our overall scope 3. And that's an area that would support emissions reduction in our scope 3.
Is it being explored to report or track scope 3 emissions in the future, or not at this time?
We report it in aggregate at an Avangrid Corporation level. That does mean that we are collecting that information internally across the company, across our operating companies, et cetera. We just don't currently today present it or report it publicly.
Thank you.
Yeah.
Okay, my next question is related to that reporting. Are the quarterly KPIs or the quarterly metrics used to track progress on ESG goals, have any of those quarterly metrics been filed in the record in this proceeding?
Not that I'm aware of.
Has the company's annual ESG report been filed in this proceeding?
We just launched it last week. So I'm guessing for it's 2023 reporting year, reported in 2024. I am guessing it's not currently in the record, but I don't know.
Chairman, could I request a late file exhibit for the company's most recent ESG report, please?
Thank you. That's late file exhibit 106.
In the company's response to CAE 82, it was also alluded to the 2030 planning horizon. Could you tell us a little bit more about some focus areas for that specific target date?
Sure. So we do have both 2025 and 2030 as our nearer term and longer term goal horizons. There are a number of metrics that we are looking at and assessing. I'll give a broad view, and then if you want to dive deeper, happy to do that. When we look at our overall renewable capacity development, that's a metric that we look at. 12.5 gigawatts as an example of the amount of capacity that we plan on having by 2030. We also have a gender equity commitment for senior women and senior leadership positions, as well as women in executive positions. And so we have a commitment to 40% women in executive positions by 2030 and 50% for senior leadership is 50% by 2030 are some examples. We're looking at 100% light duty fleet by 2030 as an example, and 100% renewable electricity for all of our facilities also by 2030. Those are some of the metrics that we have.
Thank you. And are those metrics, or those, I'll say instead, those goals specifically for the company's ESG strategy, are those determined by the company's board of directors, by executive leadership? Can you tell us more about how that strategy is set specifically?
Sure. So we do review those goals every 2 years. We do that both, I would say, we do a peer analysis. We look at and understand what our peers are doing. We understand the expectations of our stakeholders. And I say it's primarily driven by the sustainability organization, but it's done in coordination with people across the business, particularly the goal owners who are responsible for that implementation. Then through our overall governance structure, we propose those goals to our management committee, and that then goes to the Governance and Sustainability Board Committee and is then approved by the board. So there's a robust structure around the overall development of and approval of those goals.
Thank you. And maybe to ask it slightly differently, where does the company's, impetus or motivation to establish the ESG strategy come from in the first place?
Yeah, I mean, I think if we just look at the company in general, our overall business model is energy transition. So the growth and enablement of the energy transition to decarbonize, to lower the overall emissions is an important one. And I think we strongly support sustainability as our strategy. And the areas that we look at include the environment, social, governance, and financial is representative of our overall strategy. And so when we look at our goals, we have 21 goals that we think reflect the overall strategy of the company and that reflect the long-term commitment we have to those goals.
In that case, is it, would the company be able to provide also as a late file exhibit the quarterly reports for the last 4 quarters, so for the last year or 12 months, I guess, of what CNG specifically has contributed towards the company's ESG strategy?
Yeah, I mean, we could look at we could develop the data. It's not something, again, we don't report specific actions by operating company. We report it holistically. So, but we could provide, well, I'm looking at Al actually in terms of I don't think we calculate leak-prone pipeline emissions reductions on a quarterly basis. I'm just thinking about our metrics specifically, what we could go down through and understand. We don't. So relative to CNG's contributions to the metrics on a quarterly basis, I don't believe we have that information for the individual operating companies specifically.
Okay, so it's being tracked, but it's not possible to report the quarterly information?
Yeah, and let me clarify. When we look at our overall greenhouse gas emissions reporting, we pull that information across all of the operating companies. So that's an example of information that we do report, we collect and report on an annual basis specific to greenhouse gas emissions reporting. When we look at our ESG goals, for example, how many fleet vehicles do we transition to electric or clean energy vehicles? That's information that we do collect and we report on a quarterly basis. So it's really dependent, providing that information specific to operating company contributions. It depends on the metric. And as I noted earlier, we don't today report across all of our greenhouse gas emissions categories. We don't report that on a quarterly basis. We only report that both in terms of collecting the information and actually publicly reporting that. We only do that today on an annual basis.
Okay. I guess what I'm getting at is for, the ESG strategy is a component of CNG and SCG's overall efforts here, and to get a sense of how the company is contributing, or those companies are contributing towards Avangrid's efforts in ESG is what I'm looking to understand, how we could see what the operating companies specifically are contributing. So if there's a better way to get that information, that's essentially what I'm after. If that's not available,
Right.
just let me know.
Right. I think and I can go back to the specific IR, I had identified of all of our goals where we do have contributions from each of the companies. We could review through that and look at, and I guess I would recommend we start with maybe an annual report on that information, recognizing nuance on our emissions reporting that's only done on an annual basis. But we could look at and build from that IR to speak to the contributions from each of those companies relative to the goals where the operating companies contribute.
I think you may be referring to CAE 79, where the table lists scope 1 and 2 emissions, base year 2020, year 2022, 2023, and includes a column that lists gas operations and an X, maybe indicating that gas operations is contributing toward that goal.
That's right.
Okay. In that case, I'm gonna retract my request for a late file here.
Okay.
It seems like that's the easiest way to sort of look at the information where contributions are being made from the operating companies. Okay. You mentioned a moment ago the stakeholder involvement, and when I asked about how the ESG strategy was set, and in response to CAE 87, the company also mentioned stakeholder input. So I'm wondering if you can tell me, please, which stakeholders specifically provide input on Avangrid's ESG initiatives? And how is that input integrated into the strategy?
So when we look at specific to sustainability related strategy and the development of those goals, we are analyzing a couple different areas. One is, again, looking at our peers. So we look at and understand our where other utilities and other energy companies may have related goals. We also look at and understand, we do and take part in a number of sustainability related surveys. CDP is an example, Carbon Disclosure Project, where we report on and receive feedback on the efforts that we make. S&P, and I only know acronyms, so forgive me, but there's an S&P survey that we also, CSA, that we also take part in. We probably participate in 12 to 15 sustainability related surveys. In those surveys, we understand and there's clear communication on expectations of how we as a leading sustainable company are responding to different areas. That's one of the key areas that we understand at a more global level, the expectations that we as a sustainable, leading sustainable company are behaving and actions we're taking. So that's a big area of focus for us in understanding our stakeholders and looking at our peers. We also actively engage with and work with our operating companies, participating, for example, in this type of work. I also support Maine and New York regulatory or operating companies in regulatory proceedings, so have a better understanding of expectations from regulators and stakeholders participating. And then also feedback from Iberdrola.
Okay, thank you. So the surveys that you mentioned specifically, who's the audience? Who is being polled in those surveys?
So those surveys are actually surveys we respond to and provide information. The surveys are developed by a number of both for-profit and not-for-profit organizations that look to benchmark sustainability metrics and actions. Typically, it's done by publicly traded companies, those who are participating and responding. And so it creates a benchmark of sustainability-related activities, governance structures, et cetera. So, and that's generally speaking, like CDP as an example, it's publicly available and you can look at and compare scores for Avangrid across global peers.
Okay, thank you. I misunderstood. I think I was looking for, who is responding to surveys that would be providing input on the ESG initiative. So maybe a different way to ask it is the original question was what stakeholders specifically provide input on the strategy. Just to drill down, do customers provide input on the ESG strategy, for example?
We don't poll or survey our customers, but we do look at and review things like customer satisfaction and understanding of customers' expectations for us.
Okay. You also mentioned peers. Are peers providing input on, peer companies providing input on Avangrid's ESG strategy?
No, it's how they're actually responding and developing their sustainability strategy and how ours compares relative to them.
Okay.
And they also participate in those surveys.
Okay. You also mentioned regulators. Are they providing input on your ESG strategy?
No, it's based on feedback that we receive from them, questions that they ask us through proceedings, et cetera.
Okay. And you mentioned Iberdrola. Does that company, that parent company, have specific objectives that sort of get handed down to?
We do
Avangrid or
coordinate
others?
with them.
Okay.
We are responsible as a subholding to provide reporting to them. They have actually sustainability related mandated reporting. And so in that activity, both in terms of goal development or feedback on ours, they may look for alignment of our goals with their goals or recognize that we provide information to them in support of their goals.
Thank you. My next question was going to be to ask you to elaborate on the annual stakeholder assessment that was referenced in CAE, but I think you may have just done that by describing how the benchmarking process, but please, if there's something that we didn't cover on how the annual stakeholder process is conducted for the ESG initiatives.
Yes, so we do have an annual stakeholder engagement process. We work with people within the business who are actively engaging with different stakeholders, whether it's regulators, whether it's environmental groups, whether it's customers or community members. And we ask them to provide information on, what are the key issues or information, that type of thing, so that we are collecting that information.
Thank you. My last question on the stakeholder input topic with CAE 87 is that the company also in its response indicated that federal policies, specific state and federal policies influence the ESG initiatives. What specific state and federal policies are you referring to in terms of how the ESG strategy is set?
So when we look at state policies, we look at the decarbonization or the commitments that have been made at the state, at states in general, in reducing their greenhouse gas emissions. Most specifically, it's relevant to us in the commitments around the renewable portfolio standards, because network loss on the electric side is reported as part of our scope 2. So as we look at state policies in reducing the emissions relative to electricity, that directly helps us reduce our emissions for our network losses.
Thank you. So I've mostly heard state policy there. Is there federal policy that's also influencing ESG strategy?
Well, we monitor the SCG climate disclosure work to ensure that we understand and are preparing for that disclosure.
Understood. Okay. I'm going to switch to the company's response to CAE 80. And I'll start by asking, can you confirm whether the health and safety initiatives discussed in the company's response are available to all employees? And also whether any of the initiatives are mandatory?
So I can speak at a high level. I am not the health and safety. I don't have the detailed information on health and safety. So we do look at and measure our TRIR. That is a goal and commitment that we have. And we also have safety relative from an ISO standard perspective. That does apply to all of the network's businesses. And we do have mandatory training relative to safety. And Al maybe will speak to this better than I do as it relates specifically to the gas businesses. But we do have, I believe, close to 100% of employees participate in some level of safety training, whether it's ergonomics specific to office or for in-field safety.
Thank you.
Really nothing to add. That's you nailed it, Lanny. That's it.
Very good. I think some of the other initiatives that were listed were, maybe I've got this, I want to make sure I've got this right. Kind of benefits to employees around sleep, around mindfulness. And maybe that's not for this panel specifically, but
I would defer to our HR colleagues
thank you.
as they're responsible for those benefits. Yeah.
All right, very good. Okay. I'm going to shift again. I'm going to go to another interrogatory response, CAE 81. Which again, Ms. Brown, I see that you're listed on this one, but if it's better for the comp panel, please let me know. The employee development programs discussed in response to CAE 81, are these programs funded by ratepayers?
You haven't read yet. That would be faster. Thank you. This is better for HR, I think, as it's more specific to development.
Thank you. I think some of the witnesses are on the next panel, so I can
Yeah.
hold that. Okay. For CAE 84, the company in its response identified women in executive positions and women in senior leadership positions as metrics that the company is tracking as a part of its ESG strategy.
That's
And you referred to those earlier too. Thank you. I'm wondering if there are specific numerical targets, and maybe you might have addressed this earlier when you're speaking to it generally, but are there specific numerical targets for those two metrics for CNG?
No, we do not have specific metrics for operating companies.
Okay, but at Avangrid, are there specific numbers that the company is working towards for the women in executive positions and women in senior leader positions?
Yes, we do.
Okay.
Yeah.
Could you repeat what they were? I
Yeah,
think you
no
said them
problem.
earlier.
Yeah, so for 2050 for women in executive positions, it's 40%. And for women in senior leadership positions, it's 50%, both of those by 2030.
Okay. And the company provided in its response to CAE 84, attachment 1, a list of employees. I think it was women executives or senior leaders. Could the company please, as a late file exhibit, provide a similar breakdown, but also include, I guess it just include all employees, so we can see as a portion of sort of attachment 1 for CAE 84 as a portion of the employee population overall.
And that's, I think, for HR, but
Okay. So Chairman, I'll hold that late file exhibit to the comp and benefits panel unless there's.
I think that's probably best.
Okay.
Yeah, thank you.
Okay.
Okay, thank you. A couple more topics from me. CAE 85 discusses the response discusses the company's supplier diversity program. And I'm wondering if you could tell us when the supplier diversity program started.
My understanding is that program started in 2022.
Okay. And how were the diverse supplier spending goals set for 2022 and 2023? These are referenced in the company's response to CAE 85.
I can't speak to the detail in terms of how they were determined. So I would have to defer to my procurement colleagues who set those goals, the targets.
I'm sorry, is that the comp and benefits panel?
No.
Yeah. I don't think that, no, it's Ms. Brown's response, but I think it's a level of detail. I think we'd have to go back and either provide in a late filed exhibit if requested.
Okay, because Ms. Brown is the witness listed on this
She is.
interrogatory.
She is,
Okay.
yeah.
So there's not a later panel we can ask it to, but rather it needs to be posted as a late file. Is that what I'm understanding?
That's right.
Okay. Mr. Kramer, do you want to phrase a late file?
Yes. So it would be for the company to provide an explanation of how the 2022 and 2023 spending goals for the supplier diversity program were established.
Thank you. It's late file exhibit 107.
In the company's response to CAE 85, the company also states that it's using a third-party tool to search for diverse suppliers. Can you elaborate a little bit on how that works and under what circumstances that is the channel for procurement versus maybe other procurement channels the company's pursuing?
It's my understanding that that third-party tool actually helps identify potential suppliers. So it's not selecting the suppliers in regards to the ones that we will go to specifically, but in terms of recognizing and identifying suppliers to include in as part of the bid process.
Okay, so it's if I understand it correctly, it's more of it's an identification tool, and then the company might find eligible vendors who would meet its requirements for the diverse supplier program, and then include them in a list of potential vendors that would receive an RFP. Or
That's correct.
Okay.
So one of the initiatives, actions that we're taking is ensuring that we include diverse suppliers in the opportunity to bid. And this helps us or allows us to identify the suppliers that are diverse that could be eligible for or have the services that are part of the RFP process.
Okay, thank you.
Yep.
And I think I may ask Chair Gillette for an addition to the late file that we just discussed, unless Ms. Brown, you may be able to answer this offhand, but has the company established a target for the supplier diversity program for the current calendar year or for the rate year proposed in this proceeding?
I would have to take, we do have that information. I would have to go back and take a look at it.
Okay. Could you include it in the late file exhibit that we discussed on target setting?
Yes.
Thank you.
Okay, thank you. So I'll just amend 107 to add the 2024 and rate year spending goals for the supplier diversity program.
Thank you. Okay. Do you know, Ms. Brown, how many suppliers are currently contracted with the company that meet the requirements for the diverse supplier program?
I do not.
And could you comment on how Avangrid ensures that diverse suppliers are given equal opportunities to participate with any other procurement vendor?
I do not. I think that would have to be added to the, if you're looking for that information, I do not have it.
Yes. I think it can all go in the same late file, Chairman, unless you think it's necessary to break these out.
No, we can go in the same.
And I can repeat, I'm looking for some description of how Avangrid ensures that diverse suppliers are given equal opportunities to participate in procurement activities.
Okay.
Thank you. All right. Last few questions for me here. The company's response to CAE 86, can you confirm whether the bias training discussed in the company's response to this interrogatory, was it mandatory for all employees, including those in leadership roles?
My understanding, looking at reviewing the response, it was mandatory from 2021 to 2023 for all employees.
Okay. That would include those in leadership positions and are we, I'm sorry, just to be clear, are we talking about it was mandatory for CNG employees or Avangrid or?
For all employees.
Okay, all employees in the operating companies.
For all, it would include the operating companies.
Okay, thank you. And then beyond the training that was required for 21 through 23, as you just described, is the company taking steps post-training to implement changes that mitigate bias, for example, in its hiring practices?
They are, yes. And in terms of the level of detail, I would defer to my HR colleagues. I can absolutely say, yes, they are taking actions, but they would have the details.
Okay, thank you. And then this may also be for the other panel, but I'll ask it here just to see, how does the unconscious bias training as a part of the ESG strategy here, how does it fit in with the other DEI initiatives within Avangrid?
So can you ask the question again? Because I think there are two pieces to it. I want to make sure I'm clear.
Yeah, certainly. How does the unconscious bias training fit in with the other DEI initiatives within Avangrid? So just the relationship between this specific response to the interrogatory and other elements of
Yes.
the initiative.
It most clearly is connected to our two gender parity goals. As if we speak very clearly in that connection to sustainability. I think it's also overall part of our hiring practice and expectations that is set. It fits with the governance policies that we have in place in regards to our equal opportunity and other of our policy commitments. And in terms of the actions and more detailed actions, I would defer to specifically to hiring or additional activities. I would leave that to the my HR colleagues to answer more specifically in those areas.
Thank you. That's all the questions that I have for this panel, Chairman.
Thank you, Mr. Kramer. Attorney Wheel? Okay, I think we'll take, like 15 minutes or less, maybe. Yeah. Okay, let's go ahead and take our break then. When we come back, we'll resume with OCC Crofts. So let's break until 2:45, please. Your name, please be seated. Okay, we can resume with cross by the OCC, please.
Good afternoon, Prabisha Bandari for the OCC. So I would like to start with the purge gas recapture pilot described in your initial testimony. Could you please explain how this pilot will work?
Can we check that microphone?
I think it's on. Oh, darn it.
Thank you.
So ideally, it's us, the company, purchasing new equipment required to collect the natural gas during an abandonment process. During abandonment, you evacuate the gas from the existing main, and at this point, it goes to atmosphere. With the recapture program, you'd be collecting it and then transferring it to a new main.
Okay, so the historical and current practice when decommissioning a pipeline is just to allow all that gas within the pipeline to be released into the atmosphere. Is that correct?
It's either that or flaring it to the atmosphere, one of the two.
Okay. So going off of the Sierra Club's question about recapture being used on about 40% of all pipeline abandonment, it seems like the math there is just 40% of the 17.24 cubic foot estimate.
That's about right.
Okay, so given the company's plan to increase the amount of pipe replaced in the DIMP program during the rate year, does it make sense to be basing this projection on the 2022 numbers?
It's a conservative, view at this. Not only are we talking about the 40% as a baseline, you're also talking about lower pressure systems, when in reality, as we move forward through our DIMP plans, our abandonment projects, we'll start getting into elevated pressures, which will then capture significantly more gas and be able to transfer it instead of releasing it to atmosphere.
For low pressure pipes, is there a technical reason why a higher percentage of gas can't be recaptured?
Just the capabilities of the tool at this time.
Okay. Now, is this pilot forward-looking or are there parts that are currently being implemented?
This is forward-looking. We do not have the equipment, have not gone through and collected this, and we're requesting the purchase of this equipment going forward in this rate case.
So when do you plan to implement it?
Rate year one.
Understood. So just so I understand properly, if a pipe is being decommissioned today, April 30th, 2024, what is happening to the gas within that pipe?
It is being released to atmosphere one way or the other. It's either being flared to the atmosphere or released and just going up to atmosphere.
Okay. So is the cost of that lost gas being recovered through ratepayers?
It's part of the loss and unaccounted for.
Understood. Now, has there ever been a process to recapture or retain any gas, or has it always just been released into the atmosphere?
This is newer technology. It's only been available to us recently.
Okay. So in the Sierra Club's questioning, you mentioned the success of the pilot will determine the next steps. How is the company defining success?
If we are able to meet the 40% reduction and collection of this unit, ensuring the safety of our employees, ensuring the, being able to recapture the gas, then we would consider it a success and continue to move forward with it and try to find other uses for it as well. There are other possible uses, i.e. when we're completing maintenance, you could do some usage.
Okay, thank you. Moving on to the advanced mobile leak detection pilot. How are you going to use this technology?
So as stated in the testimony, at first we'd run the pilot parallel to our current method of leak survey to ensure that we could value validate its capabilities and be able to provide quantification of the system's fugitive emissions being released.
Understood. So do you plan to use this to aid in proactive leak fixing as a more individual leak basis or fixing gas planning more structurally?
Can you repeat that again? I'm sorry.
So do you plan to use this technology to aid in proactively fixing leaks on a more individual leak basis or fixing gas planning more structurally?
It can be used for both. So it can be used as part of the DIMP analysis to evaluate your how many leaks are on a pipeline. And then on a side of that, it could also be used to identify the higher emitting leaks and targeting those. Sometimes those higher emitting leaks are not the most hazardous leaks we have in our system or hazardous leaks in the system. They're just leaks that are venting to atmosphere. This could target that or identify the higher emissions and therefore allowing us to repair those leaks ahead of time.
Okay. Are you aware of whether other jurisdictions have found advanced leak detection pilots to be helpful in prioritizing the replacement of leak-prone pipes?
I think some other utilities have used it in that fashion as well as for compliance work.
And could you provide more details on how you plan to use the outcome of the pilot program?
Again, once we confirm its capabilities and are able to identify the quantification of fugitive emissions, we could target higher emitting leaks for repairs. Again, this is phase one. If we were to continue on down this path, we would go down to do pre and post construction projects to ensure the quality of our construction activity works, and items like that.
Okay, so page 9, line 17 of your testimony, I'll give you a second to get to it.
I'm there.
So it mentions flame ionization. How does that equipment work?
Flame ionization, it's a older technology in which gas is, as we are driving through a system or walking through a system, is collected and analyzed through a device to ensure its combustion and ensure that how much methane is within that collection system.
Okay, and infrared, I'm assuming that's just an infrared camera that can visually detect natural gas? Sure, so could you explain the infrared? Is that just a camera that can visually detect natural gas?
It's an optical device. It's not a camera, but it's something similar to it.
Okay.
It's like a laser that goes across and when it crosses the path of natural gas and analyzes and identifies that it's natural gas or another form.
All right, and how is that infrared monitored, excuse me? Is there some sort of software assistance or is there an operator that's just watching a visual monitor in real time?
During a mobile survey like it's discussed here, it's a system that hold on one second. It's for the IR device. It is the software within the equipment that collects that data and then reflects it back out to the person using it.
Okay, so it's a mix of both.
Correct. You have to have someone watching the device to ensure. You can set alarms on it to audible alarms to identify something.
Okay, and for the silical frost survey, Is that using the same flame ionization and infrared technology, just doing it in the wintertime because of the frost heaves?
The cyclical frost surveys, yes, correct.
Okay.
So it's one or the other device that, we use to do our mobile surveys with.
Understood. So on page 10, lines 1 through 2,
I'm there.
so that part mentions an increased risk of gas migration while a frost cap is present. Does this mean that the gas can have a tendency to travel from the actual leak source to find an escape route via the surface?
Correct.
And looking at page 10, lines 11 through 12, excuse me.
Yep.
States that AMLD can provide system methane emission quantification information. What does that mean?
It's, as discussed earlier, it can quantify the fugitive emissions being released to atmosphere.
Okay,
It has the capabilities. Again,
understood. So page 10, lines 20 through 21.
Yep, yes,
States that AMLD on its own has not yet been accepted for compliance surveys in Connecticut.
that's correct.
Could you explain why?
I don't think it's been proposed as a survey type in Connecticut as of yet. I can't speak to, why the state would or would not allow it to be a compliance tool.
Are you aware of any jurisdictions where AMLD by itself is acceptable?
I am. I don't have them off the top of my head. There are several companies that use this as a form of compliance, not necessarily for all their compliance, but a form of compliance for their surveys.
Understood. So page 11, line 14.
I'm there.
So it references that a portion of the O&M cost associated with this pilot is the vehicle's cost. What kind of vehicle would be used?
This wouldn't be a capital investment through our organization. It'd be a capital investment through or a purchase through a vendor. So the program as a whole is outsourced to a vendor to procure their equipment, use the existing hardware, software, and licensing, and then complete the surveys on their own. We would not be running the surveys ourselves. We as the companies or the company personnel. That's why it's not capitalized. It's solely operational expense.
What kind, does the cost paid by the company include the cost of the vendor's vehicle?
If they were to purchase one, but yes. So when we went out and requested a proposal, there were 3 options. One of them was to purchase our own vehicle and then purchase the equipment, licensing and all that, and it was significantly higher. Another option is for them to have a all-inclusive part of it, and within that all-inclusive, it could be the purchase of equipment, depending on what their needs are, and that's the proposal we have here.
Have those proposals been filed in this docket?
I do not believe so. As again, we haven't put it out to bid as this hasn't received approval to move forward. So we're just requesting estimates from contractors. And again, if you went out to a proposal, there's multitude of companies that perform AMLD work, and as the technology is evolving, there are new companies that are available to us. So we've just gone through what we have, but it wasn't a formal RFP.
Would it be possible to get a late file on those estimates received?
Sure.
Okay, so lay file exhibit 108 would be to provide the estimates for
For the vehicle proposals that they received.
I think it'd be for the estimates for the advanced leak detection pilot, correct?
Yes, that's what I'm.
thank you.
So looking at page 10 through 11. That part talks about how the plan is for AMLD to be rolled out as an incremental measure to the current leak survey and to be used in parallel. Can AMLD not use the same vehicles as traditional surveys?
Correct. It's its own vehicle, its own equipment that's installed on a vehicle.
Looking at page 11, lines 11 through 16. Could you provide details on how you calculated the O&M cost associated with this pilot?
I think that would be covered on the late file.
Now, my last question is that it was discussed perhaps in the gas operationals panel. I'm not entirely sure, but it was discussed that the oldest part of CNG's infrastructures are in distressed communities and urban areas. Is there any particular plan to deploy this mobile leak detection in those communities first?
To deploy them at those communities first. There is not. And this pilot would run, I think it's stated here, in parallel with our current survey plans. In the future, it would, one of the possibilities is it could run opposite of our survey plans, in either case, hitting distressed communities throughout.
Okay, thank you.
All right, Allison McCorney for the Office of Consumer Counsel. You guys hear me? Sorry, this mic is not, okay. Not very sensitive. Just a follow-up. Ms. Brown, yes, sorry, I want to make your name right. You were discussing scopes with PIRA staff, specifically that scope 3 emissions are not currently tracked, if I caught that correctly. Could you tell me what you mean by scope 3 emissions?
So just to clarify, I think we actually do collect, and can provide more detail in terms of our scopes 3, but we do collect information for our scopes 3 across the entire corporation, including our operating companies and including CNG and SCG. We report our emissions at a corporate level, so we don't report individual. Just to clarify that. When we talk about scope 3 specifically for the CNG, it is specifically regarding the energy that we procure on behalf of customers. That is the indirect emissions in scope 3.
Okay. Could you give me a little bit more detail on what would constitute scopes 1 and 2?
Sure. Relative to the business or generally speaking?
Let's do both.
Okay, so the most meaningful emissions that we have in scopes 1 and 2, the biggest driver, scope 1, is our gas generation facility in our renewables business in the Northwest. So that is, it's basically the balancing capability for our renewable fleet. That's our biggest driver of scopes 1. We also include, it also includes fugitive emissions for the gas businesses. And it also includes in facilities where we may use gas or oil for heat. Those are the primary drivers. Those are the biggest ones in scope 1. In scope 2, it is, I should also say fleet is included in scope 1. In scope 2, it's emissions relative to network losses in our electric business, as well as the electricity used in our facilities, and also in facilities, whether it's corporate facilities or whether it's generation facilities.
Okay, thank you.
Yep. Oh, scope 3? Scope 3, sorry, yeah. Scope 3, the biggest drivers are energy that we procure on behalf of our customers, whether it's for electricity or gas. It also includes commuting, employee commuting and travel costs, and also our supplier emissions.
Okay, all right. Thank you for that clarification. I think this question might be best for Mr. Langland. During Attorney Crame's questioning, you testified that there are 3 incremental FTEs proposed for the clean energy innovation team. Is that right?
Correct.
Okay. I feel like I missed an update somewhere, because in CNG CEIP 9, there are 3 positions listed, but the total is 2 incremental FTEs. And I believe in the direct testimony, there were also 2 FTEs listed. So I'm just hoping you can.
Yeah, no, I think it's a little confusing because we're actually talking CNG and SCG. So it's 4 total incremental positions for CNG and SCG.
I see. Okay, so now we're on the CNG panel, so we're talking they're going to be 3.
2 and 2, right?
Okay.
No, wait, no, I'm sorry. This is confusing. The R&D position is half CNG, half SCG.
Okay.
And then for the clean energy panel, we've got again, a program manager, half CNG, half SCG, and then 1 analyst for CNG and 1 analyst for SCG.
Okay. Okay. So that will come out to 2 and 2, right? 2 for SCG, 2 for CNG?
Yes, it would.
Okay. Okay, so
It's some tough math, but I just double check.
So would it be I just want to make sure I'm not mischaracterizing anything. So for the CNG panel, there are 2 incremental FTEs proposed. Is that right?
That's correct.
Okay, all right, thank you. So for CNG specifically, I know they're going to sort of split their time between the 2 businesses, but could you elaborate on what those positions would be focused on as far as clean energy innovations is concerned?
Yeah, I think we have some job descriptions included as part of the our testimony, but essentially, I think they'd be focused on opportunities to deploy RNG, geothermal. There's a lot going on in that space, like we talked about, hydrogen blending, breakthrough technologies that occur. There's a lot of work going on out at Gas Technology Institute in this space to decarbonize the gas stream, and I think there's tremendous opportunities for this group to get engaged in some of these efforts that are occurring, all around us, whether it be the Eversource geothermal pilot just to the north, or some of the U10 pilots that are going on in New York, some of the hydrogen blending projects that are going on in Chicago and other places. So it'd be an opportunity for us to get into the clean energy space that our peers are already further along than we are.
Okay. So you mentioned there were some descriptions. I think you're talking about CNG CEIP 9, if I'm.
That's correct.
Okay. So yeah, we have the program manager listed, we have the lead analyst, and then the project manager of gas engineering. So I guess I was looking for a little bit of clarity on whether any of those positions are sort of split between, I know I'm really getting into fractions here because I know that, one of the positions is listed as a 0.5 incremental FTE, right, for CNG. Is the entirety of their time going to be on clean energy innovation, deployments or technologies or research? Is any of it going to be in more sort of traditional gas operations roles? That's sort of what I'm trying to figure out.
Yeah, I'll let my colleague, speak a little bit about the R&D position, but for the clean energy positions, those are going to be completely focused outside of any operational work that we've ever done historically. They're going to be focused on essentially greening up the gas supply, new technologies that are evolving, breakthrough technologies that are evolving in the space.
Okay.
As far as R&D, yes, the R&D position would be focused on research and development. Half of that person running and managing projects at SCG, half at CNG, with their focus, yes, towards anything related to R&D, whether that's program development, stakeholder communications, meetings with those entities to look at projects, evaluate projects. They would be focused on R&D.
Okay, thank you. Are there any, other than those that we just discussed, are there any FTEs that are otherwise involved in the clean energy innovation or transition?
They're not for the CNG or SCG companies.
Are any of those positions that we just discussed union positions?
They're not.
Okay, so moving to the sort of the R&D projects more specifically, The company is requesting recovery for three, as I understand it, three R&D programs, one internal research and development program, and membership to two organizations which have R&D components, the Gas Technology Institute and the NY Search. Is that right?
That's correct.
Okay. Just for my clarification, there's reference in the testimony to GTI-OTD and GTI-UTD. I'm guessing those are both facets of the Gas Technology Institute?
That's correct.
Okay. What sort of outcomes is the company hoping to develop from the proposed, well, you kind of touched on this already a little bit, Mr. Langland. But if there's anything more specific that jumps to mind, what sort of outcomes is the company hoping to develop from the proposed internal R&D program?
The internal R&D program is really focused on projects that the company may see as more appropriate for its customers rather than GTI as an industry organization or NYSERC as an industry organization. There are needs that maybe we see are local to what our customers may need, or we need to test and evaluate. Maybe that's taking the result of a GTI project and actually putting it into practice. Well, we went through the project and we saw the scope and the results of what GTI produced as an outcome. Can we put it into practice in the field, test and try and evaluate that to see if it does hold merit before we fully implement that in an O&M process?
Okay.
I would just add that just to the, our New York customers have had the benefit of being part of GTI for many, many years. And we'd like our Connecticut customers to have the same benefits that our customers in New York have today.
Okay. Are there any specific sorts of technology? So you talked about sort of, maybe programs that GTI is utilizing and that you would maybe like to try on a smaller, more local scale. Are there any particular technologies that spring to mind? Geothermal, heat pumps, et cetera?
It's really anything that's really pushing innovation to take us to that next step, really is the whole purpose of R&D as a whole. To really achieve climate objectives and goals is what's the path and the tools and the methods to get there. At this point, there's a lot of discussion in that in the public. Not a lot of here's what we need to specifically do to get there. For example, GTI has a project called NZIP. I can't tell you the acronym without looking it up. But it's really a project that's going to look at industry initiatives. What are recommended practices that can take a company along that path to achieve expected climate goals, methane reduction, improve the way their system operates, versus any one company on its own, by itself, trying to decide and test and evaluate those and potentially fail at those. So GTI as an organization will go through a project that looks at and evaluates those before any one company may not necessarily want to go that path or see the results of that without having to do those evaluations themselves. That's one of probably several examples.
I'd say, a couple that I've others that I've seen, that I was on a call with NYSERC a couple of weeks ago. They're looking at the effects of hydrogen blending on gas odorization, as one example. It's another project that they're looking at where you can take a marble and put it down in the gas main with a camera and just remotely take it anywhere in the system to look for leaks and things like that. So really innovative stuff going on there at these organizations, and we'd like to be a part of it for the Connecticut customers.
Okay, so would it be fair to say that these programs, these R&D programs are sort of exploratory in nature?
Yes, yes.
Both
They
internally
are
and
working to
externally?
develop the innovation and get to a point that you can implement something that may not exist presently, or develop a solution or a process as to achieve an end result that an expectation is set today. The PHMSA, for example, publishing the LDAR, leak detection and repair requirements. Very, very limited information as to how a company can achieve those goals towards quantifying that, whether it's through advanced leak detection methods. But are there other capabilities out there? Are there other technologies out there that people aren't aware of or companies aren't aware of to actually bring in and implement to achieve those goals? Really, the whole purpose of R&D is really to get to a level that may not exist today, and really come up with a solution or evaluate that before you need to reach a point. Developing a cure for cancer, you had to start someplace, right? They didn't have it the first day. There's been years and years of research and development to get to a point where there may be medicines that are beneficial now that weren't available 10, 15, 20 years ago.
Sure, okay. All right. Give me just a second. You answered a couple of my questions in there, so just a moment. On page 14 of the direct testimony, I'll quote what I'm saying, so you don't need to worry about getting there. The proposed internal R&D program discusses that potential projects will be, quote, short-term in nature and not significantly complex, end quote. You know, we're talking about the energy transition and all these sort of innovative envelope-pushing ideas. Does the company plan to use the requested R&D funding to explore any projects which might be longer term or more complex?
The intent with the longer term, more complex, is to leverage GTI as an organization, NYSERC as an organization. Those projects typically leverage other utility participants in there so that there are 10, 15, 20 different participating companies that contribute an amount of money towards that project, where those larger scope projects can be $2.5 million, $3 million, and you leverage that group participation. The internal projects are really focused on small things that we can do internally ourselves. Maybe we would hire our own contractor to test and evaluate something and follow a similar process towards identifying a project scope, looking at what the expected outcome is, a finalized report, just run through that ourselves, where those projects are so small in an organization like GTI or NYSERC, they're not substantial enough for those to be completed there. So it provides a platform to do smaller scale, easier, less involved type of work, and still achieve an improvement or an outcome of that we can learn from and improve.
Gotcha. Okay, thank you. So I know we've sort of discussed, the broad spectrum of things that might come out of these R&D investments. In the testimony, I believe it was referenced, potential geothermal, potential non-pipes alternatives. Is there an expectation that this research will result in either a geothermal or non-pipes alternative pilot programs?
My initial answer would be no, only because of the size and magnitude of a geothermal pilot. The requested funding is significantly small, I think, to achieve a goal of that magnitude. And I think that would really be in the other area of the Clean Energy Innovation Group, looking at how that funding might occur and what the mechanism for that could be.
Okay, thank you. Along that same line, are there any specific programs expected to come from any of the, either the external or the internal R&D programs?
Expected, I think in testimony, we talked about some of the types of scope areas that NYSERC looks at, for example, whether that's system hardening, whether that's emergent technology on fuels, as Mr. Langland mentioned, interaction of hydrogen with odorization, interaction of hydrogen with rubber components, soft components within the gas system, and what that it does to leakage and what that does to risk and safety. I think as that funding is approved, we would then go through a process to select what projects are currently being offered. They continue to evolve both from GTI and NYSERC on a regular basis. So it's very difficult to pick a snapshot now that says, I want to participate in this project. In the time it may take to approve the case here, there could be new emergent projects that come out. There could be more technology, better advancements that are more focused towards what the benefit to the customer could be.
Okay. Thank you. Actually, following up on something you said, Mr. Langland, I think you were talking about how your New York company has been involved in GTI and has gotten benefit from the membership in that organization. Have any pilot programs in your New York subsidiary come from R&D from membership in GTI?
When you say pilot programs, you're referring to the 2 pilot programs that we proposed here in this case?
No, sorry. So, for example, I think it's some interrogatories. I want to say ENG 36, maybe 39. You were talking about a geothermal pilot that's currently either being developed or in use in New York right now? So for example, would any technologies in that pilot have come from your New York subsidiary's membership in GTI?
Not geothermal, no.
Okay. All right, I think that's all my questions. Thank you.
Tom Wheeler for Office of Consumer Counsel. Just a couple of follow-up questions. There was testimony, direct testimony and testimony today about the gas recapture program. I was just curious if someone could explain like physically how that works. Is it some sort of like suction device that removes the gas from the pipe?
Yeah, so it's a device that connects through valve hoses connections and literally pulls almost a vacuum from the line into the compressor, pushes it up, brings it up to a different type of pressure and into our system.
Oh, so it goes directly into the system. It's not like
Correct. It doesn't get captured and held in a tank. Yeah, you can do that, but that's a different way than what we're envisioning.
okay. So when like a piece of pipe is being decommissioned, that pipe is like separated from the overall system first, right? And then the gas within that kind of separated pipe is removed and redistributed to the system. Is that generally accurate?
Correct. As it's disconnected, it's pulling the gas downstream into this unit. And then prior to getting a air gas mixture, it then pushes it into the new pipeline.
Okay. Is that pilot also going to be conducted by an external vendor, like the advanced leak detection pilot?
No, this will be us, the company purchasing the equipment, getting trained on how to use the equipment and then using the equipment ourselves.
Okay. Is the cost for that program based on equipment purchase estimates then?
Correct. Capital investments. I do believe there's a $4,000 operational expense that carries on for the maintenance of the equipment, whether it's the trailer or the unit itself.
Okay. Have those estimates, the equipment estimates, been filed in this docket?
I don't recall. I don't know if it's I don't think they have. Same reason. Correct. There's multitude vendors. I think realistically it was pricing between one of the vendors and us that we've had experience with from one of our other companies.
Okay. Could those estimates be filed as a late file?
They can be.
Okay, 109 is provide the equipment estimates for the
the proposed gas recapture program.
yeah.
I guess it might not be for the late file description, but with the understanding that these are not necessarily the estimates for this proposal, they're the estimates that were used as the basis for the cost of the proposal. Is that correct?
Correct. There wasn't a formal RFP put out there to collect this data. It was just conversations between vendors out there and the companies.
Okay. And for both the gas recapture and advanced leak detection program, then if Pura were to approve those, then there would be an RFP process moving forward.
Correct.
Okay.
Be an RFP process, a lot, given the description as described here, and we go from there.
Thank you. Mr. Langland, just a quick follow-up. Attorney McCorney was asking about whether the New York affiliates membership in GTI had contributed at all or had any impact on the geothermal work that's being done in New York. Has the membership in GTI produced any new program of any kind in the New York affiliate?
Well, my colleague, Mr. Ketchmark, speak to that, but certainly there's been royalties the New York companies have received as a result of GTI R&D efforts that have been commercialized. So that comes right back to the New York companies as being participants in those efforts. But I think Barry can speak to some of the projects that have come to fruition in New York.
Specifically to a program that was implemented?
The one that comes to mind to me, Barry, is in the satellite leak detection technology that was being done in New York. It's not commercialized specifically the work that was being done in New York, but there are other technologies that are actually picking up leaks from a satellite. You can actually pick up a fuzz leak on a meter set from a satellite today. I know a lot of that work was done in New York. Where that is as far as actually being deployed, I can't speak to, but I know there. How long has the New York company's been part of the GTI effort?
New York's been participating in research and development since the early 90s. The Public Service Commission has regularly approved in filings and rate cases the continued growth of that program over the course of time to really research and look at innovation towards, changing the way the business operates. I would specifically have to go back and look at to see if there are individual programs that we have implemented or what has really come to fruition that has changed the way the business operates. Off the top of my head, I can't tell you what that might be.
Okay. And you mentioned a minute ago, I think, royalties. Would those be as a rate-making mechanism in New York? Would those offset the costs that ratepayers contribute towards the GTI membership?
I'm not aware financially how those are treated in New York.
Okay. Would that be the proposal in Connecticut? If PURA were to allow this GTI investment and there were resulting royalties, would those be a revenue offset of some kind?
That's the way I would envision it, and that's, I believe, the way it's being it works in New York as well. Yeah.
Would it be possible to file as a late file exhibit a comparison of the royalties received versus membership dues in New York?
Sure. Yeah, we could do that.
Maybe dating back. I'm sorry, Mr.
Catchmark.
You testified a minute ago how long New York had been the New York City had been a member of GTI. Could you remind me what that?
We started R&D in the 90s. I would have to look at the specific date that we started beginning participation with GTI.
Okay. Perhaps could we just get that going back to 2017? I'm just not because we don't need to go all the way back to the 90s, I think. Thank you. Sorry, I forgot to pause for the late file exhibit.
110.
Thank you. Just last few questions from Ms. Brown. I heard your conversation with Mr. Kramer regarding ESG goals. I just wanted to confirm my understanding the goals that were referenced are established at the Avangrid level and they're not established at the CNG level?
That's correct.
Okay. And CNG's activities contribute as part of the overall performance of those goals?
That's correct. And maybe the best example is leak-prone pipeline replacement, the emissions reductions relative to that.
Thank you. I was going to make a reference to that. Would the pilot programs proposed by this panel also contribute towards those Avangrid ESG goals, environmental goals?
I would expect they would, assuming they would help reduce fugitive emissions, then yes, they would.
Okay. And I think I heard you mention in conversation with Mr. Kramer, something about a light duty fleet. Was that a reference to a goal to transform the light duty fleet to an electrified fleet?
That's right. We have a commitment actually across all of our vehicles, looking at both medium, heavy, and light duty fleet for transition to clean energy or either electric, hybrid, or other options. So that's yes.
Okay. And you mentioned that's a longer term goal, I think.
Well, we have commitments out to 2030.
Okay. So I meant as compared to the single rate year being proposed now,
That's right.
Okay. Are there any other CNG level contributions towards Avangrid's specifically environmental goals?
Well, I would also say, as we think about emissions reduction, we are looking at renewable electricity in our facilities. So reducing our facilities emissions and CNG's facilities would be included in that.
Okay. So that would be like, for instance, would that include adding solar to facilities?
It could be solar. I mean, I think one of the things that our facilities are benefiting from today, again, is the greening of our electricity. So the emissions intensity or the emissions are being reduced in the state because of those commitments. But it would also mean either solar and or renewable electricity PPAs.
Okay. And would Avangrid be contributing any capital towards any of those CNG programs, or would that would all be ratepayer funded?
Those would all be the ones that are relative to, for example, fleet or leak-prone pipelines would be ratepayer funded.
Okay. Thank you. One last question. I think I heard you testify earlier again about the leak-prone pipe replacement program and as you just referenced, the contribution towards emissions goals there. And I think you had a discussion with Mr. Kramer about the quantification of that with respect to CNG. Would it not be possible to quantify that using lost and unaccounted for gas data?
The metrics, I believe we do collect, and I would have to check. We do look at the emissions and the loss metrics for all of our operating companies, whether it's electricity or gas. So that information is collected. We also work with the operating companies to collect the metrics in regards to emissions reduced relative to leak-prone pipeline.
Okay. Thank you. That was, I believe, our last question for this panel. Thank you.
Thank you. Attorney Anoichi? Attorney Wright? Thank you. EOE? Thank you. Commissioner Karen?
One quick question. We were talking about the fact that for the advanced meter leak detection, you hired a third-party vendor to operate and manage the program. If successful, would you continue to use a third party, or would you begin to operate it yourself as a company?
Again, as this is a pilot, we would evaluate and then make the determination whether it's better for us to purchase the equipment and vehicle and software and the benefits of it, right? The pilot right now, as it stands, is just to look at the capabilities, efficiencies of it, and if we're able to quantify our emissions. If we are able to do so and find other uses of it, then it might be more beneficial to go down the path of purchasing and finding other ways to use it.
Okay, all right, thank you.
Thank you. Few questions. I'll start with Ms. Brown. In exchange with Mr. Kramer earlier, you discussed how the ESG goals are determined. And I think I heard you mention in the response that part of the company's overall ethos is to support the energy transition. Did I characterize that correctly?
That's correct.
And when you use the word or the term company in that statement, as I just said it back to you, by company, were you referring to the operating company, Avangrid, Iberdrola, or some other entity?
I would, would include all companies within Avangrid.
Okay, thank you. To support the energy transition, you know what, I'll ask a different question. With the ESG goals that the company sets, or in this case, Avangrid, do those take into account state laws across your footprint?
I think they take into account state policies or laws that are then framed in terms of actions for the regulatory companies. An example would be, for in New York as an example, on the integration of distributed energy resources, there are programs and actions that are specifically required for the network companies to support that So I think it's relative. I mean, we consider the policies as it relates to how it impacts our overall organization and the goals, but also in terms of the required actions from a regulatory perspective.
Thank you. Specific to Connecticut, are you familiar with the state's greenhouse gas reduction goal of 2040?
At a high level.
High level. Can you state whether the adoption of that state law factored into the determination of the ESG goals that are currently in effect for Avangrid wide?
I think they are considered, as I noted earlier, as we look at and as we forecasted our network losses for electricity and how we envisioned in terms of the carbon neutrality goals, scopes 1 and 2, including the electric network losses, that was a factor.
Thank you. If I could ask it slightly differently in the inverse, with the ESG goals that are currently in effect for Avangrid across your footprints, the same absent the Connecticut 2040 goal, if you can speak to that.
If I understand your question, we have considered the decarbonization and relative to, again, our PS targets, or that is a factor in our forecast for emissions reduction for our network businesses. So it has been factored in as an assumption for our network losses and the relative emissions.
Okay, I think that answers my question. But let me just say it slightly differently. What I'm trying to get at is if there's a way to quantify how Avangrid's ESG goals have changed over time due to the adoption of the 2040 target. So I was trying to ask it in both ways.
Yeah.
Would it be the same as it is today, absent that target? Or if not, if you could point to any specific factor about how it has changed with the adoption of the 2040 law.
Thanks. So our electric vehicle and storage commitments are aligned with those state goals, as an example.
Okay, but thank you. But the decision has not been made at the Avangrid level to effectuate the support for the energy transition down to the operating company level of the gas companies.
No, partly because of the long-term commitment that we have for our goals. So we have, as I mentioned earlier, we have commitments for 2025 and 2030. We look across all of our companies for those collective actions, but we don't have long-term commitments, if you will, from a regulatory perspective. So we look across the company, the actions, reducing carbon emissions for scopes 1 and 2 as an example, or electrifying fleet. But it's not, I would say overall reflects the position of the Northeast states in the state targets around decarbonization in general, not in specifics. And we have those long-term actions as well. So I can't point explicitly to, except for the direct connection I can make to those goals are around our forecast for network loss. That's the most direct connection, I would say. The other ones are, I think, reflect the expectation or the overall view of the policies reflective of the Northeast states, if you will.
Thank you. In the exchange with the Office of Consumer Counsel a few moments ago, I thought I understood the testimony to suggest, and I think it was from you, Ms. Brown, that the company views, or I apologize, one of the witnesses, I think, suggested that the clean energy initiatives you view as in furtherance of the company's ESG initiatives. Is that an accurate characterization of the testimony?
It wasn't me, but I can speak to, I think overall, we look to reduce emissions as appropriate. I mean, I think Blue Pole Pipeline is an example where we're looking to reduce emissions as well as for safety purposes. But I can't speak to I think it's we as a company are looking to decarbonize and are aligned with the Paris Agreement that looks to decarbonize by 2050. That's a commitment as Avangrid.
Yeah, I just think we won't be able to meet our emissions goals on wind and solar alone. We need to look at low carbon fuels and creative alternatives to help us get there. And I think that's where we talk about a framework and a collaboration at a statewide level.
And I'll maybe flip it the other way. We have not made a commitment around decarbonizing or on our scope 3 commitment, which is our largest emissions, and it's specific to the energy that we procure on behalf of customers, both from electricity and gas perspective. We haven't made a commitment because we don't have full control. And so that's just an example where we take action where we can, but recognize also that in some cases those actions are not within our control.
Thank you. So specific to the clean energy initiatives that are before us in this case, is it the company's testimony that those initiatives are in furtherance of the state's 2040 goals, or rather the company's ESG goals, or some other option? Like, said another way, what is the impetus for the clean energy initiatives that you have put in front of us today?
I think, yeah, it is to begin to work towards the 2030, climate ambition, goal, policy, law, whatever that may be, and help us to start to, achieve reductions in our emissions. As we said, we feel like leak-prone pipe replacement represents our biggest opportunity. We also see what our peers are doing in this space, whether it be clean capture, advanced leak detection. These are opportunities that we have to start getting down that road. That's why we're presenting them here in the way we are.
Thank you. Can you reconcile the testimony you just provided with testimony from earlier in the week that you couldn't take any further actions absent a state framework around the?
I'm sure. Again, I think what we're proposing here in this rate case, these are small items. When we start talking about geothermal pilots, we're talking to tens of millions of dollars. To enact something like that would need a statewide framework in order to move forward. So we have a regulatory construct for recovery of those kind of expenditures.
Thank you. Does the company currently invest in any R&D that is not recoverable from or funded by ratepayers?
Yes, in the renewables business, innovation is being funded as it relates to, in some examples, maintenance of wind turbines for efficiency and better overall performance.
And that's funded from equity issuances, from dividends up from the operating company, or what is?
It's my understanding it's actually, built into the operating costs as part of the PPA sold to customers. So it's based on the business case relative to sale of the electricity or the renewable electricity to customers.
Thank you. And is any of that R&D related to the gas businesses?
Not that I'm aware of, no.
Thank you. Does the company have an ESG score?
There are many ESG scores. When we spoke to our surveys, the survey work that we do, whether it's SMP or CDP, those scores. There are scores, and many of them are publicly available.
Is there one of those that the company points to in its marketing materials or in its regulatory proceedings? Is there one specific that you would rely on?
Yeah. So one that we work on that was announced this year, there's a number actually, but is the Just Capital, the Just 100. So Avangrid was the #1 utility in that Just Capital list as one example.
Thank you. And is there a membership fee or participation fee for participating in that ranking?
No.
And the survey, is that one of the surveys that you spoke to earlier?
That is one of the surveys that I spoke to earlier.
Thank you. What is an ESG score? Or, well, let me pose it this way. Would would you agree that an ESG score is a measure of how well a company addresses risk with respect to environmental, social, and governance issues in day-to-day work and operations, or is there some other definition that you would
Yeah.
provide?
So I have heard that there's over 300 ESG standards and surveys. It is an incredibly dynamic environment. And so the surveys in general are relative to the parties that issue them. So there are surveys that are done relative to investors. There's surveys that are done relative to environmental organizations. It really depends on the organization that issues those surveys. Yeah.
Thank you. That's helpful. And you mentioned investors a moment ago. Is it fair to state that when combined with financial analysis, ESG scores can be used by investors to gain a better understanding of a company's long-term potential for positive growth?
Yes.
I think that's it for me. Thank you. I appreciate that. Attorney Benor, do you need a moment to consider redirect?
Yes, if we could have 5 minutes, please.
Yep.
The company does have some brief redirect.
Okay, Attorney Venora?
Okay, thank you. We do have some brief redirect. One of the questions touched on a topic area where we have Ms. Van Luling, where we need her to address the question.
I'm sorry, which question is usually redirected?
I understand that. It was a question that you had posed and Ms. Brown answered it relating to R&D funding at the Avangrid level. And there was a reference to the renewables business. And so Ms. Van Luling has more information relating to that.
Okay, just one moment. I want to make sure I get this right, but I think our usual practice is to limit redirect to the witness who provided the answer.
We can, well, all right, our preference is to do it through Ms. Van Luling, but we can maybe save it for the next panel when we do the SCG version to make sure it's clear.
Okay, is she listed as a witness on that panel?
Not on the, no, she's not. I mean, but she's been sworn and she's appeared on several other panels so far.
Okay, well, I'll give you the latitude to answer it. I will say that since the question was posed to another witness, if it inspires additional cross based on her response, then I'll provide all parties the latitude to ask her follow up as part of the SCG panel.
Yeah, that's fine. That's fine. I'll start with that question. So Ms. Van Luling, do you recall a question that Ms. Brown responded to relating to R&D funding on the renewables side of the Avangrid business?
I do.
And can you explain how that fits within the economics of the renewables business?
Sure. So the renewables business is a completely different economic model than the regulated utilities. So the renewables business enters into purchase price agreements and or sells into the market at set prices that are determined by Avangrid Renewables. They do not need to go through any regulatory approvals. Embedded in those prices is the underlying cost of investing in the continuous improvement in ESG, since it is the renewables business. Also, part of what makes the renewables business profitable is the significant tax benefits that do arise for different various aspects of investments that we have in renewables. And so when we look at the economics, we're able to invest more money in renewables, and we get that money back through the PPAs.
Thank you. That's all we have on that question.
Okay, thank you.
Okay. I'll pose this to to Ms. Brown and Ms. Langland, Mr. Langland. The other day at transcript pages 801 to 802, Mr. Langland was asked a question regarding whether CNG estimates scope 3 emissions for its various customer groups. And the answer he provided was, we do not estimate scope 3 emissions. Ms. Brown, with your commentary and discussion of scope 3 emissions, can you just clarify or react to that to make sure the record's clear?
Yes. So we do calculate scope 3 emissions for CNG and for all of our operating companies. And it is part of our aggregated greenhouse gas emissions reporting for Avangrid.
Okay, thank you. Mr. Langland, there was a question to the panel from the attorney for the Sierra Club relating to whether the company could learn from its New York affiliates in terms of, potentially implementing a geothermal pilot. Do you recall that discussion?
I do.
And is there a regulatory construct in place in New York that is not in place in Connecticut that facilitates geothermal pilots?
There is. New York legislation passed a public service law to allow thermal energy network implementation in the state.
Okay, thank you. And lastly, Mr. Kaczmarek, you were asked a question during the OCC's cross-examination about whether there have been any research programs that have provided benefits to company operations. Since the time of those questions, do you have several examples that you could provide?
Yes, I do.
Could you explain?
Yeah, yes, I do. For example, my search as an organization went through the process. That better? Okay. NYSERC, for example, went through a project that evaluated residential methane detectors. There are 10 different detectors on the market available. Through that process and evaluation, we wanted to come up as an organization and recommend to customers what we think is the most, as the expert, what is the most best you can get towards functioning and will detect methane. Not all of them were identified as equal. Some had very significant flaws in terms of how they operated, what the reliability was, what their sensitivity was. But that project went through and specifically evaluated manufacturer products commercially available to the customer to identify what we thought were the primary best pieces of equipment that a customer could purchase. In conjunction with that, we also included that in a New York rate case where we developed a program that we distributed those on a basis towards, I think we started out with low-income customers. We built a program that deployed those out to the community to provide that benefit to the customers. Other examples, NYSERC also worked with various industry partners as well as the Department of Energy, worked at and built an internal inspection pipeline robot, established technology that never existed previously to perform inline inspection. We partnered with them as a project that was a $2.5 billion R&D project that started in approximately 2010 that actually develops a technology there today that LDCs can use to inspect and evaluate pipelines without taking them out of service, so doing them in a live manner without affecting customer supply and service to our customers. The GTI, after I believe Superstorm Sandy and Hurricane Lee, recognized a need to come up with a way to assess large-scale damage. They came up with a project that looked at post-disaster risk assessment using LiDAR in terms of how that technology should be deployed, how you can look at the impacts, wide-scale impacts to your system in the event of catastrophic flooding, system outages, large-scale problems. That's, I guess, our brief summary of some of the things that are in play today, that we've used today from R&D projects we participated in.
Thank you. That's all we have on redirect.
Very good, thank you. And I think the witnesses can stay seated because my recollection is the panel on page 29 we're adopting via affidavit, which is the Sierra Club and Conservation Law Foundation. And thank you for filing that motion, which brings us to the panel on page 30, which is the Clean Energy Innovations panel for the SCG company. So I'll ask authority staff to approach the witness or the cross-examination table, and Attorney Vaughn, are there any new witnesses?
No.
Okay, then please proceed.
To the panel members, do you recall answering a series of questions I posed to you at the start of your testimony for CNG on the topic of clean energy innovations?
Yes.
Yes.
Yes. And do you also recall answering questions on cross-examination from Pura staff, Sierra Club and CLF, OCC, and the commissioners during that portion of the hearing?
Yes.
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 And in appearing now for SCG for the purposes of administrative efficiency, do you adopt your testimony from the CNG transcript and stipulate that if asked the same questions again, your answers would be the same?
Yes.
Yes.
Thank
Correct.
you. The panel is available for cross-examination.
Thank you. Mr. Kramer, please.
Thank you, Chair Gillette. Hello again. Okay, so for SCG, is the company, similarly to the testimony provided for CNG, tracking performance against the ESG strategy at the Avangrid level, for reporting purposes, tracking for internal reporting only at the operating company level?
That's correct.
Thank you. I asked about some specific actions that CNG was taking toward accomplishing the goals at the Avangrid ESG strategy level. Would your answer be the same for SCG?
They would.
Let's see. The company stated in the CNG panel that the quarterly tracking of sustainability actions is done to file those KPIs, just to keep those KPIs internal. But the annual ESG report is made public, and that represents the actions of all the operating companies. And similar to the CNG, I guess the CNG question for a late file, we don't need another late file for the annual report. So I don't think there's a different question there. But for the 2030 planning horizon, I asked about some key priorities that would represent actions that CNG is contributing towards Avangrid sustainability efforts. Would SCG's efforts be any different from CNG's?
They would be the same.
Thank you. I asked a question about whether this panel could confirm whether the health and safety initiatives discussed in the company's response to CAE 80 are available to all employees. And I was referred to another panel, but you did provide some answer as to the required training, safety training for many of the employees. Is that the same response for SCG?
It's the same, yes.
Thank you. With respect to the ESG metrics for women in executive positions and women in senior leadership positions referenced in CAE 82, I asked about specific numerical targets that the company was working toward. And would the answer for SCG be the same as the CNG response?
It would be the same. Yep.
Thank you. And would, with respect to CAE 85 in the company's response, would the company similarly state that for SCG, its supplier diversity program was started in the same year, 2022, as CNG?
That's correct.
Thank you. And I asked a question about the third-party tool used to evaluate or used to search for diverse suppliers. Would your answer be the same for SCG?
It's correct. Yes. The same.
Thank you. I asked with respect to the company's response to CAE 86, if you could confirm whether the bias training that was mentioned in that interrogatory was mandatory for all employees, including those in leadership roles. Is your response for CNG the same as SCG?
It is the same.
Thank you. I also asked how unconscious bias training fits within the company's other DEI initiatives. Is your response the same for SCG?
It would be the same.
CNG. Thank you. We had an exchange and I asked questions about how the ESG initiatives were accounted for stakeholder input, as was indicated in the company's response to CAE 87. Would the company's response with respect to CNG be the same for SCG?
It would be the same.
Similarly, for the annual stakeholder assessment process mentioned in CA 87, would it be the same process for SCG as it is for CNG?
It would be the same.
Thank you. And I asked about specific state and federal policies that have influenced Avangrid's ESG initiatives during the CNG panel. Is your response the same for the CNG panel? Is it the same for the SCG panel? Excuse me.
It's the same.
Thank you. I think that's all the questions that I have for this panel.
Okay. Mr. Kramer, I heard you say late file exhibit 106, we didn't presumably need because we expect the company's most recent ESG report to be the same between CNG and SCG.
That's correct.
Did we reissue 107 directed to the SCG, the supplier diversity goal?
Let me ask whether it would be different for completeness. Would the late file exhibit 107 related to supplier diversity program? And I think it was an explanation of the way in which those suppliers get equal opportunity. It was also to identify the targets for the current calendar year and the rate year. And would that late file be the same for SCG as it would be for CNG?
It would be the same. I also, just in regards to the supplier diversity program, there is more information on that. And I just wanted to provide the reference. It's ENG 002 SCG. Has more information in regards to, I think, some of the policies you had asked about and more detail in regards to that program for reference.
Okay, I appreciate that. I'm looking back at my notes and it looks like even when it's the same or expected to be the same, I've reissued the prompts. So to be consistent with earlier, I would issue 106 and 107 as 111 and 112 for SCG, please. And I think that's it. All set? Thank you. Okay, Attorney Crane and Attorney Lawn.
Thank you. I just have one or two questions. So I appreciate the clarification in response to the questions about scope 3 emissions. And I know there was also some back and forth about this earlier. I just wanted to clarify whether any reporting on scope 3 emissions could be provided at the SCG or CNG level in this proceeding.
We can provide that. I think it would be a late file, but yes, we can provide that.
Okay, could we request a late file exhibit? Was there one requested earlier? I wasn't sure on this topic.
Specific to whether we have the scope 3 emissions?
Yeah, to providing scope 3 emissions at the CNG and SCG level.
I think we started to ask a lay file and I might not have given a number to it. I don't see it in mine.
I don't recall one on specifically on this.
Okay. I'm not saying provide the scope 3 emissions at the operating company level. Is that the request? Okay.
And would it be possible, I know we're on the SCG panel now, but is it possible to do that for CNG as well?
Okay, thank you. So 113 is CNG and 114 is SCG. Please.
Yeah, and just to clarify in terms of scope 3, I think following the discussion, so scope 3 is driven by and measuring the energy that we procure on behalf of our customers, and the information is received from the team that basically procures any energy on behalf of customers. So just to clarify the source of that and that information.
Understood. Thank you.
Yep.
That was my only question.
I am Shannon Lawn from Conservation Law Foundation. Ms. Brown, you mentioned earlier that you are familiar with Connecticut's greenhouse gas reduction targets. Do you know if the state is on track to meet its 2030 and 2050 climate goals under the Global Warming Solutions Act?
I don't know.
Has the company calculated what percentage of the state's emissions are attributable to lost and unaccounted for gas?
I would have to check if the unaccounted for losses are incorporated in our scope 1. I don't know. I would have to check.
If possible, would we be able to get that information once you've confirmed as a late file?
Yeah, and just to confirm, I think the actions, I think we, to clarify what elements are included in the greenhouse gas emissions reporting for scope 1 around fugitive emissions, what is included in that, I think is what you're looking for.
Right.
Yeah.
I just want to clarify, you're asking for what the state goals are, or what the state tracks versus what the.
No, I'm wondering if the company has calculated what percentage of emissions at the state level can be attributed to lost and unaccounted for gas.
Oh, I'm sorry. Just to clarify, I thought you meant in our scope 1 emissions reporting is unaccounted for gas included in our fugitive emissions calculations. That information we have. I don't have any information in regards to how the state level emissions is reported.
Okay, then I think you just answered my next question, but just for the sake of the record, I'll still ask it. Has the company calculated what percentage of the state's emissions are attributable to the use of natural gas by the company's customers?
I'll flip it another way. We include in our overall reporting on the emissions relative to the energy that we purchase on behalf of our customers. That's the information we do have, but relative to the overall state, we don't have that.
Okay. And does Avangrid periodically assess whether the emission reductions that the companies have achieved so far are in alignment with the trajectories needed to meet the state's climate goals under the Global Warming Solutions Act?
So our commitments around carbon neutrality for scopes 1 and 2 are aligned. We're looking for carbon neutrality by 2030. So they are absolutely aligned. Where we have not made commitments, as I noted earlier, is our scopes 3 relative to energy that we procure on behalf of customers, in this case, gas. And that's because that is not within our control. So we don't have control. It's a regulatory obligation for us to procure energy on behalf of customers.
Understood. Okay, thank you. No further questions from me.
Similar to my request from earlier about scope 3 emissions, could the company also provide for SCG and for CNG scope 1 emissions, the quantification of them, of greenhouse gases? Yeah.
Yes, we can do that. We can do that for what we report. The two things that we report relative to the two companies are fugitive emissions and emissions related to the energy we procure on behalf of customers. So we, for other details, we don't have all the details relative to scopes 1 and 2 for the companies broken down by the company level.
Okay, so I'll amend LAFOG exhibit 113 and 114 to, I think, instead say provide the scope 1 and scope 3 emissions reported at the operating company level. Does that capture what you can provide?
I think that is accurate.
Okay.
Thank you.
And just to close the loop, so does that, I thought we started to ask for a late file and discuss whether lost and unaccounted for gases captured in scope 1, is that, was that withdrawn or?
I thought that, I thought they were sort of, it was included in scope 1. Is that not the case?
Well,
If,
just to clarify,
Yeah.
because Al just clarified it for me, I think I interpreted your question is unaccounted for. Do we capture and account for unaccounted for emissions in our fugitive emissions, which is scope 1? I can say that again in a different way if it's not clear. Al confirmed we do. So for our fugitive emissions reporting that is included in scope 1, it includes unaccounted for as well as leaks.
okay.
And sorry, that is reported at the company level for CNG.
That can be provided.
Yes.
That can be provided at a company level. We don't report it publicly, but we capture that information.
Okay, and so to confirm, will that be captured in late file exhibit 113 and 114? That level of granularity?
I believe so.
Okay, very clear. Very clear. Okay, thank you.
Thank you.
All set? Okay. OCC, please.
Hello again, Tom Wheel from the Office of Consumer Counsel. This is going to be quicker than our first round. I had one follow-up question just for my understanding, Ms. Brown, from the conversation you were just having with Sierra Club and Conservation Law Foundation. The calculation of emissions attributable to the gas that's procured on behalf of customers, is that like, is there like a volumetric multiplication? Do you know what that calculation is?
So the basically it's looking at the energy procured, the volume of energy that is procured on behalf of customers multiplied by an emissions factor. And I believe that emissions factor is an EPA emissions factor, a standard that's used.
Okay. And would that calculation or emissions factor be included in the late filed exhibits that were just requested?
It can be.
Okay. Could I just ask for, I believe that would be as a scope 1 emissions, is that, sorry, scope 3?
Scope 3.
Yes.
Scope 3.
Does the panel recall answering a series of questions from the OCC regarding the gas recapture pilot?
Yes.
Is there any reason that any of those, the responses to those questions would be different for SCG as opposed to CNG?
No.
Okay. And just for clarification, would that also include the 40% capture, the initial 40% capture rate that was discussed? Is that the same percentage for
The rate
SCG?
would be, but not the amount.
Okay.
The rate would be, sorry. Not the total amount.
Okay. And the total amounts included in your direct testimony for SCG, is that correct? I believe, if it helps, I believe your testimony discusses a volumetric amount of cubic gas released during abandonments, and then also discusses in the case of CNG, a 40% amount.
It does.
Would that first number be different for SCG? Which first?
What's up? It is. Yep.
Hold on. I'm just not sure. We're losing track. Can you
Sure, yes.
give him a direct question and he can then give you an answer?
Yes. For the SCG, testimony included an estimate of 17.24 cubic feet of gas released during abandonments in 2022. Is that number the same for SCG?
It looks to be in the testimony, correct.
Okay, thank you. And I apologize, that was a confusing question. There was some questions regarding the potential impact of the company's request to expedite the DIMP program on the ultimate gas recapture results. Would any of those responses be different from SCG?
No, they'd be the same.
Okay. And there was ultimately some questions from Ms. Bandari and also later from myself asking about first the way that the current system, which allows gas to, as I understand it, to be released, and also the way that the gas recapture pilot generally would work. Would any of those responses be different for SCG?
No, they'd be the same.
Thank you. There were also a series of questions about the mobile leak detection pilot. Are there any details of that pilot that would result in different responses to the same questions if asked of SCG?
No, I think the only difference would be the total cost of the equipment, of the program, I should say, the pilot.
Okay. And some of the questions that we asked about that pilot regarded the estimate of those costs, and there was some testimony about estimates received. Would those be different estimates with respect to SCG?
No, they'd be the same. It's just the mileage is a little bit different.
Okay. Could we, acknowledging that the late file will contain the same estimates, could we ask for a duplicate late file for the estimates that the advanced leak detection program is based on?
Yes. So 108 will be duplicated as 115.
Thank you. And just while we're at it, later on in the earlier, I had asked as a follow-up, a second late file seeking the equipment purchase estimates for the gas recapture pilot. Would those be the same estimates that were used for SCG and CNG?
They would.
Okay. So acknowledging that, could I request a duplicate of that late file exhibit as well?
Yes, that's late file exhibit 116.
Thank you. Do you recall responding to questions about flame ionization, infrared, the cyclical frost survey? Those three subjects?
I do.
Would any of those responses be different for SCG?
No, they would not.
Thank you. And the responses about the proposal to have the advanced leak detection program administered by a third-party vendor, would any of that be different for SCG?
It would not.
Thank you. Attorney McCorney asked some clarifying questions, I believe, of Mr. Langland regarding the FTE request for the Clean Energy Innovations panel. Just to confirm, I'm worried because Attorney McCorney is not here and she was doing the math correctly, but to confirm, it would also be 2 incremental employees for SCG as well as similar to CNG?
That's correct.
Okay, thank you. And the responses with respect to the responses to the questions regarding those incremental FTEs, job responsibilities, would any of those responses be different for SCG?
They would not.
Thank you. The OCC asked a series of questions about the research and development proposals. Both the research and development the research and development work that the proposed FTEs would engage in, as well as the proposals to invest in third-party research and development. Would any of that testimony be different for SCG?
No, it would be the same.
Thank you. And I think finally, Ms. Brown, I had asked you a series of questions about specific to CNG's contributions towards the activities CNG engages in that can contribute to Avangrid's environmental ESG goals. Do you recall those questions?
I do.
Would there be any different responses, any other examples that SCG, that apply to SCG that didn't apply to CNG?
They would be the same.
Thank you. One moment. Though the last question is perhaps not duplicative, but just for confirmation, the proposed cost for membership in GTI and NiSearch, with those, my understanding is that being different entities, both CNG and SCG would have to separately pay those costs. Is that correct?
The GTI funding for OTD and UTD is based on customer count because CNG and SCG both have different customer counts, that the expense for that is slightly different. NiSearch, I believe, was the same between both companies.
Okay. And there's no possibility to, in the initial testimony, and I think it's testified earlier today, the companies made clear, I believe, that for instance, the New York affiliates membership in GTI, that the benefits of that membership can't be shared with Connecticut affiliates. Is the same true as between SCG and CNG?
That's correct. It's based on the customers belonging to a particular company.
Okay. And with that, that concludes OCC's cross of this panel.
Thank you. Attorney Inoue. I think Attorney Wright has waived. EOE. Thank you. Commissioner Karen.
No questions.
No questions. I just have one. I think, Ms. Brown, I understood a distinction you made this time around a little bit differently than I had the first time around about the Avangrid's I want to use the word reliance. So Avangrid takes into account the Paris Agreement in setting its ESG goals. Is that?
We are aligned with the Paris Agreement. Yes.
Okay, thank you. And I had asked a question a few minutes ago about on the CNG panel about your familiarity with the state of Connecticut's Greenhouse Gas Reduction Act, and I think your answer was that that you had broad familiarity. Is that accurate?
That's correct.
Okay. Then a few moments ago, in response to, I think, some questions from the Sierra Club and CLF, I understood your testimony to be that you weren't sure, however, whether the state was on track to meet its targets. Is that an accurate recounting of?
That's an accurate accounting.
Okay, thank you. So my question now is, do you know if we are on target for our Paris goals?
If I understand, the Paris goals are basically net zero by 2050. So my understanding is the Connecticut is aligned with or consistent with that.
Okay. And does Avangrid factor into its determination of its ESG goals, whether we're on target for the Paris goals?
Whether the states are aligned with? Or
I was just trying to understand the distinction, and maybe you weren't intending to draw one earlier.
No, I mean, I think if I understand what you're saying, I would assume that the Connecticut state goals are also materially aligned with the Paris Agreement, which is decarbonization by 2050.
Okay, and you understand, and so my question a moment ago was, if you don't know whether we're on track to meet our Connecticut goal, do you know whether we're on track to meet the Paris goals?
I think I think both would be true, if I understand the question. If the Connecticut goals are closely aligned with the Paris Agreement, whether you're on track to meet your Connecticut goals or the Paris Agreement, it would be the same, if I understand that logic.
Oh, I'm sorry, I wasn't trying to draw any logic. I was just trying
No,
to
no, no. I
understand.
mean, I'm just trying to understand the question. So that's my understanding. They're generally aligned, therefore being on track, you'd be on track for both or not.
Okay, thank you. Let me just check my notes. That might have been it for me. Did any of the questions that I asked you earlier with respect to ESG, would any of your answers be different with respect to SCG?
They would be the same.
Thank you. Okay. All right, I think that's it for me. Attorney Benora, any redirect?
No, we have nothing for redirect.
Okay, thank you. Then my thanks. This panel is excused. We are adopting the Sierra Club and Conservation Law Foundation's Clean Energy Innovations Panel by affidavit, which brings us to the Compensation and Benefits Panel, which we can probably briefly start and unless there's an overwhelming preference to continue until tomorrow.
I think we have our panel here. We can start.
Okay, let's do that, please. If I can call up CNG's Compensation and Benefits Panel.
While the panel gets settled, I'll just note that we have sort of a combination of several new witnesses as well as some who have previously been sworn.
Okay, thank you. If you could just introduce your new witnesses and I'll administer the oath.
Sure, I'll ask the panel to please each state their full names and positions for the record, beginning with Mr. Visconti.
Walt Visconti, and title you said? Senior Director of Total Health and Retirement Programs.
Jackie Rosato, Director of People and Organization.
John O'Neill, VP HR Performance and Governance.
Andrea Van Luling, Networks Controller.
Jacob Hurwitz, Senior Director of Revenue Requirements.
And Chair Gillette, I would just note that we did identify Ms. Rosato for the case coordinator in advance of the hearing. She will be adopting Ms. Ullman's discovery responses. and testimony.
Understood. Thank you. Okay. Then if I could ask the new witnesses to please raise your right hand and I'll administer the oath. I swear to tell the truth, the whole truth, and nothing but the truth under pains and penalties of perjury. Thank you.
Thank you. Ms. Van Luling and Mr. Hurwitz, you remain sworn. Mr. Visconti and Mr. O'Neill, as part of your preparation for this docket, did you provide pre-filed direct and rebuttal testimony and exhibits which were marked as exhibits CNG-CBP-1 through 13, exhibits SCG-CBP-1 through 13, and exhibit CNG-SCG-CBP-rebuttal 1?
Yes, I did.
And did you also sponsor responses to interrogatories submitted in this proceeding?
Yes.
Do you have any updates or corrections to your pre-filed testimonies or interrogatory responses not previously identified for the record in an interrogatory response?
No.
No.
And do you adopt your pre-filed testimonies and interrogatory responses as part of your sworn testimony in this proceeding?
Yes.
Yes.
Thank you. Ms. Rosato, as part of your preparation for this docket, did you review the information provided in exhibits CNG, CBP 1 through 13, exhibits SCG, CBP 1 through 13, and exhibit CNG, SCG, CBP rebuttal 1, as well as interrogatory responses sponsored by Ms. Tina Ullman?
Yes.
And do you have any updates or corrections to those pre-filed testimonies or interrogatory responses not previously identified in the record for in an interrogatory response?
No.
And do you adopt those pre-filed testimonies and interrogatory responses as part of your sworn testimony in this proceeding?
Yes.
Thank you. The panel is available for cross-examination.
Thank you. And we're going to start authority staff with Mr. Graylish, please.
Thank you, Chair, and good afternoon, panel and everyone. John Grealish, authority staff. I do want to just start off by saying I'm going to be asking for a couple of LFEs, most likely, that are compensation payroll related. Just as a blanket statement in advance, I won't need any names, addresses, emails, anything personal like that. But I would need a, employee number or some other sort of field that indicates separate individuals. All right, so why don't we start with, if you could call up OCC 101, please.
I have it up.
Thank you. So this is a clarifying question. OCC 101 shows a year-to-date for 2023 an amount of 38,000 in waived employees after the Hartford Union increased the annual waiver credit from 2,000 to 2,500 effective January 1st, 23. It also seems to list out 16 unique employees, which if I divide that into the 38,000, might come down to 2,375. Please just clarify that my assumption is correct, that it's a prorated situation where employees might not have worked the entire year and might be.
That is exactly correct, yes.
So does that amount, the 2,500, seen it was raised up in January, is that it occurs on a biweekly basis? How does that work?
Per pay period, correct.
Okay, excellent. Thank you. All right. Appreciate that. So that was my only question on that, but I do have a couple of late file exhibits I would like to request. The first one being is to provide an update to that particular response for the entirety of calendar year 2023. It was initially submitted on December 6, 2023. So we could get a full year. That would be fantastic.
Okay, and that's OCC 101, correct?
That's correct.
Okay, so that's late file exhibit 117.
In the second late file, I'm going to request is in an unlocked Excel document, if you could provide a list of all employees who participated in the company's medical and dental benefits in 2023. And if you could include a breakout of the monthly costs
for both medical and dental benefits for each participating employee. And if you could also provide a total expense amount for the medical and dental benefits for 2023 as of December 31st, 2023. So we have the full, the full year of activity.
That's fine.
Thank you.
Okay, I'm sorry, 1 second, let me catch up here. So I think that is late file exhibit 118. Okay, and this is the caveat that we're not requesting employee names, but rather use of another indicator.
Yeah, I would note for the record that I believe the employee UID numbers are typically considered confidential, so I'm sure we can come up with another anonymizer
Okay.
that differentiates the employees.
Okay, I think that's fine. I think we recently issued a ruling on a protective order that provided similar instructions to use some kind of, if you could
Exactly.
use similar methodology. Thank you.
Thank you for clarifying that. That's fine. As long as I can decipher different individuals, whatever works best, best on your end. All right, so I'm going to move over to the mitigation payments. If you open up OCC 100, please.
I'm there.
I just curious where in the application or any of these subsequent filings, responses, is the rate payer savings from the pension freeze discussed and quantified with a calculation?
I'm going to have to defer to the Rev Requirements panel, but Jacob is here and he can help speak to that.
Okay.
It was one of the last data requests we filed. Let me just dig for the number.
Okay, excellent. Thank you. While they're looking for that, I just want to clarify about the employee numbers. I just thought of something that you said you would just come up with numbers that aren't the official numbers. I would just ask that on all the late files I ask, they're consistent with each other. So if you're making one employee one, they're employee one on every late file, so we can
Okay.
properly do comparisons, please. Thank you.
So your question was, in effect, have we quantified the savings produced?
That's correct.
I think that might be most directly addressed by our response to RRU 732, which describes broadly the factors informing our decision to take this action and provide some quantification of the revenue requirement savings it's produced that we've reflected here.
Okay, great. Excellent. Thank you very much.
I referenced 732. I think that's technically an SCG response. I think it has a CNG peer, which will.
Excellent. Thank you. Just one moment, please.
That CNG peer would be RRU 675.
Thank you, Mr. Horowitz.
All right, thank you for the wait. It looks like the answer is saying that um, the mathematics doesn't really, provide any insight. So what can you, did you, I mean, cost benefit analysis is also mathematically driven, of course, but is there anything additional that you could provide the authority that, just, it kind of gives us a better, feel for the savings for the ratepayers?
Yes, and, I don't know that the beginning of your question is really a fair characterization of our response, but let me try to sort of describe broadly what we were thinking, then I'll invite my colleague, Mr. Visconti, to add to my answer. As described in this response, each time the company decided to freeze the accrual of pension benefits for a particular plan, we conducted a financial analysis, a cost benefit analysis, and we provided that financial analysis as attachments to this response. Subject to check, I think there were three, because there were three distinct decisions to freeze the accrual of pension benefits, and we provided the financial analysis underlying each one of those. As to your, that decision was not informed purely by the rate year, because the decision has an effect both before and after the rate year, and you'll see that reflected in that financial analysis. To your question as to, what gives the authority or other interveners comfort that we're doing what's in the best interest of ratepayers, I might point you to the last paragraph of our response to subpart A, where we describe that, again, while our decision wasn't informed specifically by the rate year, you can see the benefits of our decision reflected in our rate year. And I'll just read a couple sentences of this response. As reflected on Schedule CNG WPC 3.16, the company's proposed rate year pension and OPEB expense is negative 2.074 million, a reduction of almost 8 million relative to the company's pension and OPEB expense of 5.909 million in the unadjusted historical test year. In contrast, the company's proposed rate year 401k expense represents an increase of less than 1 million relative to the company's 401k expenses in the historical test year, while mitigation payments, i.e. expenses incurred as a direct result of the freezing of pension benefit accruals, represent 1.736 million of the company's proposed revenue requirements. Those costs are far outweighed by the associated reduction in pension expense. So to your question, at each time we made a decision to freeze the accrual of pension benefits, we conducted a comprehensive financial analysis demonstrating that our decision was in the best interest of ratepayers. And you can see the fruits of that decision reflected in our proposed revenue requirement here.
Okay. I do appreciate that. Thank you. One moment, please. All right, thank you. I will, I'll take a review of those. I did want to ask for request an LFE for the mitigation payments as well. I'm hoping you can provide a breakdown of all the mitigation payments that occurred during 2023. Broken down in as much granular detail as possible, even down to how much each employee received, if that's a possibility. If not, maybe by division, department, or something of that nature would work.
That's not a problem.
Excellent, thank you.
Okay, that's LAFO Exhibit 119.
Excellent, thank you. Okay, so I'm going to move over to compensation now. If I could have you call up Exhibit CNG/SNG-CSP-1, and I'm looking at page 45.
Is that the customer service testimony by any chance?
It is, but it has a, what I'm looking at is an incremental FTE summary chart that's on page 45.
I'll help the witnesses just pull up the doc. I'm just going to pull the doc.
All right.
I'm sorry, can you just say that reference? I was in the comp and benefits, not
Oh,
customer.
absolutely. It's Exhibit CNG/SNG -CSP-1. And we're on page 45 of the document. I think the PDF is page 48, I believe it is, but it's page 45 of the document.
We're almost there. Just 1 second. We're there.
Excellent. Okay, so you can see you provided the incremental FTE summary chart that includes the allocation between employees, between SNG and CNG, but also includes a column indicating 50% of the position was allocated to UI in the last rate case. I just want to confirm that my understanding about that is correct, that positions marked by an X are the 50% to UI and 25 to each of the various, the gas company, CNG and SCG.
That's correct.
Okay. A second follow-up to that, if you look at I believe it's the top line, the line with the customer advocate position, and that does have an X to indicate a split with UI. But the total SCG and CNG equals 1 FTE, whereas the rest are at 0.5, which would be more expected.
Yeah, one moment. I think I know the answer. Let me just confer to make sure. It was 2 people.
Okay.
So the same concept, just the numbers are twice as large.
Okay, excellent. Okay, I thought I thank you for that clarification. I thought these were just straight up percentages. So if you had, say, 6 employees, it would have been 3 and 1 and 5 and 1 and 5. So when we're on the other positions, that would indicate one individual, not.
I think that's correct. And I'll just broadly offer the customer service panel can describe these specific positions in
Okay.
further detail for you.
All right, so they might be a little bit of a better outlet for that.
I'm broadly familiar with the incremental FTEs we're requesting and how they're reflected in the revenue requirement, but to the extent you have specific questions about these individual positions, I think those would be best addressed by the customer service panel.
Okay, excellent. Thank you. All right, so we'll move on to OCC 181, attachment 1.
There.
Okay. Can you discuss why the test year incentive compensation expenses is at 687,000 compared to the average of 2018 to 2021 inclusive, which comes out to an average of 375,250?
Oh. This was the actual incentive compensation, so the percentages achieved in the test year in 2022 were higher than the prior years.
Okay. And was there any outlying, any outliers that occurred that would have contributed to that?
No, I would say that the goals themselves were generally consistent year over year, just better performance in 2022.
Excellent.
Or better achievement.
Okay. Maybe I should visit that. So better achievement in 2022, was that due to a different grading methodology perhaps, or changing the parameters of the program or anything of that nature?
Not changes in the parameters of the metrics itself, just higher achievement in the metrics themselves.
All right, so when we move on to exhibit CNG, CBP 2, I'm gonna leave out the dashes going forward. I'm looking at page 3, section G.
Page 3, section.
Section
Okay.
G. I'm looking at the 200% incentive factor used for the in the incentive plan. I'm just curious if there's a justification how that figure was arrived at? You know, well, how did you wind up on 200%? You know, as one of your factors?
So if you look at exhibit 10 from the testimony, we actually show in there how we benchmark against the peer group. And so it shows that we're, in terms of this, we're at or below market. So that factor there is part of that, is we check it against market.
Okay, and that's pretty consistent with the other members of the peer group? Are you a little bit lower, you said?
They may have slightly different mechanisms. We don't know all the mechanisms they use, but in terms of the percentages, if you look at our target percentages versus theirs, going up through the more junior grades, we are actually below. When you hit the higher grades, we're slightly above, but still within the 50th-ish percentile.
Okay. All right, thank you very much. I do appreciate that.
Okay, I think we're gonna stop here for the night. And at the risk of giving another instruction about that late file, I just want to make sure I was clear. Earlier I alluded to a motion ruling. I was referring specifically to motion number 97, which is, I think, where we allowed the company to refile with job titles that were more generic. So I know I'm probably stating the obvious, but in the late files that we've issued, 118 and 119, and the ones that are probably coming in the morning when Mr. Graylish continues, it's those, whatever you've came up with to issue the generic job titles, because we do still want the information by job title or classification that they ask for. It just allow it to be more generic so that it's not traceable to the individual employee. So apologize for beating that issue to death there, but if that's clear, okay, great. Thank you. Then we're going to stop here for the evening. We'll reconvene tomorrow at 10 a.m. and we'll pick back up with Mr. Graylish's testimony. So thank you. We'll see you in the morning.
Thank you.